Afternoon all, how are we all doing? Sorry, a bit late today. Still struggling, dead arm. Afternoon, Giamond, Franco, David. Dow has already put in a monster move. Yeah, I was just watching the DAX, the Nasdaq rather. Obviously, we just had the PPI news, all positive again. A fairly substantial move on month, 0.3 on the standard PMIs and 0.2 on the core PMIs. So yeah, big moves on US dollar, which is good. So more positive US dollar. We should be seeing a good increase in the US dollar from here. So looking really strong longs now. I was just going to have a quick look at the sentiment and see what the sentiment was. 1 o'clock. I should have a 2 o'clock sentiment actually by now. I'll just refresh that. Just wanted to see what the retail crowd are up to on that. Afternoon, Brian. Papa. Woke up to dangerous risk trade hitting TP. Big win. Always good. So what are they doing with the US dollar at the moment? Yeah, market. They're short US dollar CAD and US dollar yen. And they're long everything against the US dollar. Okay. So, yeah, longs on US dollar basically, because they're all the wrong way around, especially with US dollar Swiss. Anyway, they're all getting killed. So, yeah, big moves for the US off of that PPI figure, but not dramatic. It's a positive move, obviously, but it's butted up into resistance on a lot of stuff or support and got a bit stuck. So, but yeah, it's all good news again, US dollar. We've just had Mesta coming out after the PPI figures were released. Obviously, inflation remains too high, which we know. But the interesting thing was Fed rates must rise above 5% and remain there for an extended period of time. He also said something about a 0.5% increase. Where was that? I saw it flick up. Basically, he was saying that he can see a 0.5% increase on the next rate announcement, which would take them up to 5.25. So it's possible that what we're going to do with the next rate rise on the US in March is a 0.5 increase, taking us to 5.25, and that will be their terminal rate. And then they will see how that affects inflation and unemployment. And assuming that unemployment remains as it is or comes down and inflation drops, that will be the terminal rate, 5.25 for the US dollar. So we'll see what happens. But yeah, it looks good. Nasdaq, what's the time? We've got 4 minutes until the open. So other than that, it was just basically trying to see where Mester said that. I saw it pop up. While the Fed goes above 5% depends on the data. I could have sworn I saw him say a 0.5% increase, but maybe I didn't. Maybe my drugged up brain is misreading the 5% as being the terminal rate as a 0.5. Must rise above 0.5, above 5. So yeah, that would say, I mean, above 0.5 is above 5 is 5.25, isn't it? It's only going to go in 0.25% increases. So, but anyway, so yeah, we've had that. So that's the PPI figures out. We've got low speaking after market tonight. Oh, it's basically after the swap as well. So not really. That's more into tomorrow than today. And retail sales for the pound tomorrow. So nothing much else tomorrow, apart from the retail sales on the pound. So that's pretty much it. So I would expect this afternoon's movement to be pretty dramatic on the indices. But saying that, we have moved an awful long way. We're pretty much down at ADR on the NASDAQ. The Dow is at yesterday's low, and the S&P is down at yesterday's low, almost at ADR as well. So obviously this downward move is indicative of opposite of US. US has gone up. So this afternoon I'm trading the NASDAQ. Going back to my good old friend, the NASDAQ. Leah's Cheech and Chong trading again. Yeah, I love Cheech and Chong. They were a stable part of my childhood. Well, not my childhood, obviously. My informative years at college. Cheech and Chong movies, brilliant. Yeah, it's not that sort of drugs, unfortunately. It's excuse me, prescribed ones by the doctor. Oh yeah, talking about doctor. So tomorrow I've got to go to the doctor's. He's going to call me in the morning and say, come in. Basically, the doctor's surgery is literally at the end of my road. So he basically phones me up and says, right, got a spot, come in. And it's drop everything. So I'm not going to trade tomorrow morning or probably tomorrow afternoon. I'm going to take tomorrow off because I've got to go to the doctor's and see about the arm. And he's going to prescribe me new drugs, which means I've got to go and get those from the pharmacy in the afternoon. And as you know, I was late last week or whenever it was, I went to go to the pharmacy because it's never a walk in, it's ready. It's walk in, no problem, be ready in half an hour. 45 minutes later, is it ready yet? Sort of scenario. So I've decided tomorrow I'm just not going to bother doing these live streams because it's going to be so disruptive. I don't know when I'm going to be here and when I'm not. So I'll be back to normal on Monday. Outro, double checked, and I'm definitely in on the M5 this afternoon. Had a stinker this morning. Yeah, so if you traded the Dow, the DAX this morning, yeah, the DAX this morning, the opening was at just terrible. Market is just open now. I'm not taking the pre-market today. So I'm doing pretty much what Outro's doing. I'm trading the 5, 10, 15. This is the pre-market is fantastic when it goes, but as you can see from the DAX this morning, the DAX this morning pushed up. I had an opportunity to take $1,200 off the table there. Can't type. I let it run and got stopped out for about $500. Pushed down, got a little bit out the lows, which pushed me back to a break even. All it did for the session was literally go sideways. And then obviously now we've tanked. So it was sitting there, and it's news which is causing this. The more I'm watching these opening range breakouts, it's when we have big news days, that's when we're getting all of these accumulations at the open, because the market is waiting for those moves to happen. So it's difficult to know how to trade the open when you've got news, because there's news virtually every day. So I think it's a case of if we haven't got massive news, that's fine. If we have got massive news, especially US dollar based, you want to kind of stay out of the market. So I'm going to be testing that theory and watching. I'm going to try and get some back testing done over the weekend and go back over the big news releases for the US. And just see what impact new news days have on the open in the DAX, basically, and obviously in the Dow as well. But the trouble with this sort of day is, you know, we've put in an ADR's worth of move already now off of this news. So is the market exhausted? Probably. Has it got much oomph left? Don't know. We'll find, but find out. But it's yeah, it's difficult, the opening range when you've had such a big move. So the pre-market 15, which is here, you've just gone long on the pre-market 15. That's a bit weird. We all froze up there. So yeah, I'm not trading it today. This will be the day, won't it? This will be the day. It just goes whoop, because I'm not in it. Cut down on sugar and take turmeric supplements. I don't have much sugar, and it's a trapped nerve in your neck has got nothing to do with your diet. It's just something that happens every now and again to some people. Very, very common, apparently. But yeah, I'm super fit. I cycle over 150 miles a week. Yeah. So I'm not the sort of sit down blob on a chair all day bloke. I do 8 to 12 spin classes a week and average 15 miles a class. So it's not a health problem. It's just a trapped nerve. I can't do anything about it. It's very annoying. Franco, pass it, Brian. Cheech and Chong. We have to watch some Cheech and Chong videos. I'm not going to put them on here because I'll be in trouble. I'm in on pre-market 5, but I accidentally set my EA on the 1 hour this morning. Yeah, that was a big mistake. That's the only problem with EAs. They're only as good as the people that operate them. Which is why I like VPSs, because I don't operate them on VPS. They operate themselves. Let's just watch the Dow at the same time here. See what the Dow's up to. I'm a cyclist. Well, I'm not a cyclist. I'm a spinner. So indoor cycling. I'm actually a qualified instructor as well. Not that I've done anything with it. I got my qualification over COVID with a view to doing part-time spin instructor. But obviously this is tricky on the old time. So so we are struggling to make any headway, which I'm not particularly surprised about if it's trying to go long, because there's an awful lot of bull action on the US dollar, which is going to hold this down today. So we've got 30 seconds. This is your 5-minute opening range. Mester's talking again. The Fed can accelerate the pace of rate hikes if conditions warrant it. Yeah. So something else that Fester was saying. Fester. This Uncle Fester from the Addams family. Mester was saying this morning was the fact that obviously inflation is still too high and it is starting to drop. The fact that unemployment hasn't been affected and retail is going well and everything else is going well in the economy, it gives the Fed a little bit more breathing room to increase rates further. And if we get higher interest rates, obviously, that will be bullish US dollar again. So, yeah. more bullish talk about US today. So it's all bullish US, which is bearish indices, which is continuation bear market. So if you're taking the 15-minute, the pre-market 15 on the Dow, you have just gone short. So again, a little bit of divergence across the Dow and the NASDAQ this morning, or this afternoon, depending where you are. Diamond got a small profit out of this morning's DAX on the pre-market. Yeah, you need to be quick this morning. I think you've got to be quick with that pre-market. That pre-market is a real scalp. You've got to be out on that. I need to do some more set file adjustment on that. I want to test basically whether or not just grabbing $500 in the morning is the best thing to do with that pre-market. I think it is, because that initial cash balance candle is usually quite big. So we want to be in and out fast. Short NASDAQ. We are just testing the lows at the moment, but gone short one NASDAQ on the 5-minute opening range. God, this data feed's choppy. Hello, data feed, where are you? Oh, that was weird. Okay, breaking out to the downside on the NASDAQ. The Dow is trying as well. Let's have a quick look at where we're potentially going if we are going short. Ooh, long way. Okay, so we're approaching ADR. So the next stop on this really is sort of 110 to 130 ADR, which is previous day's low. Yeah, TP's a little bit eager on that. I would say I'd probably, just to be safe, I would probably go down there with that one. New MT4. 1100. I'll be a bit wary about trying to target 150. But so it's look out below basically for the Nasdaq if this holds. Need to see if it'll hold though. What's the Dow up to? So yeah, everything is basically so we've got yesterday's previous day's low, which is Monday's low there, and failing that, it's lower Friday. So there's a fair old amount of room. If we can break lower, there's a long way to drop with no real support. Giving up on the Dow. Yeah, well, after yesterday, I'm not giving up on the Dow. I just decided to switch back to the Nasdaq. The Nasdaq that I've got running is doing much better on the 5, 10, 15 than the pre-market has been. Although the previous week, the pre-market was doing way better. So I'm actually running all 3 strategies on different accounts. So I've decided to look at this one today because this is probably the 5, 10, 15 is a much slower entry. The trouble with a pre-market on a whipsaw is, as you know, you can get killed very fast and you could be out max loss within half an hour, which I don't really want to do. It's nice when you get them, but when you don't get them, it's just painful, isn't it? Okay, so we're just pulling back off the lows. Dow also trying these lows, but not actually managing to hold them either. Okay, so potentially flipping long on the Nasdaq. Yeah, long Nasdaq now. Hedged at the moment. So that is the 10-minute opening range in. So it's just hedged me basically into a long and a short now. Obviously, one of these is going to stop out. Going long. Okay, so we're running for the highs. So the obvious spot on this is this. I mean, if you can call it a propulsion gap, I mean, that's not really an accumulation, is it? Let's face it. That's more of a one candle pullback. But that is the main propulsion move off of the news. So that would be where we would look to retest if we're going to continue short. So fair old movement to the upside available if it's going to run. But I'm not convinced today because I think the market's probably quite exhausted. Decided to do a challenge with my Forex funds, and wow, the spreads compared to NSF aren't even in the same league. NSF? Who's NSF? Yeah, my Forex fund spreads are awesome. They're really tight. I don't know who NSF is. I'm not familiar with that. I probably am when you say what NSF stands for, but I can't think off the top of my head what NSF stands for. So stopped out on both NAS. Yeah, if you're trading the pre-market. Actually, if you're trading, yeah, pre-market, that's a nasty whipsaw, actually, isn't it? Because that hasn't given you a second long entry, that candle. Next step funded, yeah, okay, yeah. Yeah, that 8 cap. 8 crap, we should call them. Yeah, that 8 cap broker is absolutely terrible. I really don't know how they're still in existence with the spreads they've got. They are a proper broker as well. It's just they're terrible. I don't quite know why they've obviously got some kind of deal that 8 cap are offering to prop funds or to prop firms, basically. I'm not quite sure exactly what it is, but what makes them so special and why they want them, but I don't know. Okay, so we're just pulling back out of the 10-minute range. So there's your 15-minute range. So we're just pulling back at the moment on the 10. This set file is using a 40-point stop. So it's a fixed 40-point stop on each trade. So controlled risk. Probably percentage of spread. I know, David, and I've asked you before, but I forgot. Can you please show me again how you managed to get your Trade Manager dashboard set to the top of the page? Mine is at the bottom. So all you do is, that is the separator. Yeah. So there's a separator like this. Look, this, but I've got everything set to white. So you grab the line as if you're grabbing that line. Basically, the Trade Manager dashboard appears in a window. And there's your chart here. There's your chart. Trade Manager dash appears in a window. So all you do is you drag that up. There's dash. Okay, long NASDAQ. Holding at the moment. So there's your 15-minute range in. That's your 15-minute opening range. So I'm going to add to a long or go for the break of the lows, but not re-entering on this. So this either goes or it doesn't. This is the lower reward, lower risk set file. I'm a crazy man. Testing the hedging on my Forex funds account just to try it out. I enjoy practicing drawdown control. Yeah. I'm running a test. I'm running a similar test at the moment. That's the wrong one. That one. So banked 4K, running 5K drawdown at the moment. I'm not too worried about the drawdown here because this is what I'm trying to. I'm just monitoring basically what the drawdown is. And obviously this is trading with every pair. I'm not going to be trading with every pair because that's just suicide. But what I want to do is run three pairs per currency. So I'm just seeing what each individual instrument gets up to from a drawdown perspective. So I'm monitoring this every few hours just to see where we get to with different settings basically for drawdown control. So this is closing 2/3 of the position out with 1.5 DD with 1.5 ADR drawdown. So I'm just kind of monitoring it basically to see how far into drawdown these get. And obviously then I will look at pairs to trade, but I want to pick 3 pairs. So slightly more exposure because obviously you're banking constantly with the hedging strategy. But I want to just get a handle on the drawdown as to how quickly to execute the drawdown control. But at the moment, nothing's got anywhere near 1%. So pound Swiss is the closest at the moment. But pound Swiss has also banked as well. It's banked profit. So I'm just keeping an eye on it basically. Okay, second long NASDAQ. Dow's rejecting the lows as well. So let's have a quick look at what the US dollar's up to. We'll have a look at all the FX pairs in a minute. So yeah, US dollar's pulling off the highs at the moment. It's just started to run out of steam. So yeah, the US dollar's starting to wane a little bit now. So that'll give the indices a chance to potentially pull back. So we'll see what happens. I hate to say it, but you might just be a bit overexposed there. Yeah, that's not a real account. I wish that was. I wouldn't mind if it was my account. It wouldn't bother me being in 5% of drawdown, having banked 4%. But yeah, that's a little bit overexposed. But if you look at it, because it's a hedge set file, obviously it doesn't matter which way it goes. Whenever it pushes on the US dollar, I'm left with 4 shorts. The pound, if it was to push down, obviously I'd have 6 go into drawdown there, which wouldn't be good. But if it pushes up, I've got 6 profits and 1 drawdown. So yeah, that would be nice. But this is just a live test, basically. This is the one thing I hate about MT4 is you can't multi-currency test very easily. You can do it on MT5, but the results on MT5 are just a bit of a mess. So multi-charts is much better for multi-instrument backtesting, but I don't use multi-charts. I ought to start looking into that more with multi-charts. I have in the past, but never really got anywhere with it. So, but yeah, so I just want to, I'm monitoring basically, I can obviously do manual drawdown control. So right now, if this was, for example, a funded account and I was running all 28 pairs, which I would never do. If it was though, I'm well within drawdown limits at the moment, but what I've got is a bank of 4K to like knock half of that off, knock half of that off, bank that, knock half of that off, you know, so I can manually intervene. I'm just curious as to what the max gets up to, because this will only jump because I've got 2 longs on here, for example. Sorry, I've got 3 longs on there and 1 short. And at the moment it's dropping, so the short is going into profit. When that hits target, obviously that drawdown will jump dramatically because all of this drawdown will suddenly become realized, and then that will jump up to 1.5 or something like that. So I'm just keeping an eye on it periodically, the overall and individuals, just to see where we're sort of getting to, and that will give me an indication then as to what to use for lot sizing. Why are you not changing charts? Come on. Hello, it's locked up. It's all frozen on me. Maybe 13 MT4s is pushing it a little bit. Yeah, it's just that one for some reason that's locked up. Anyway, but yeah, it's a test. It's not. I don't think I've ever done that. I've never done a test with any of the set files across all pairs at the same time, because obviously the exposure is far too big. But it's really interesting to see it running with all pairs, because how quickly it banks profit. You know, it's just made $4,000 in 48 hours. Might be sitting in half and 5% of drawdown, but yeah, still bank $4,000. So worst case scenario, if I shut the lot down, I'm $1,000 in the hole. But yeah. So looking at the buyer scorecard, there's not been a lot of change on that, obviously. Sentiment, there's not been an awful lot of change on either. So all the pairs that we were looking at this morning from a retail sentiment perspective for longs and shorts are all kind of the same. So it's been longing the US, longing the euro, and short Aussie US, short pound US. So everything that's been shown on sentiment for longs and shorts is all kind of playing out. Oh, I've got to change that. Need to change that so that Z index works properly. I'll leave that on there to remind me. So yeah, sentiment trades are all working well. Again, I'm testing that on the EA. I've got sentiment trades running. God, it's really locked up on me, that has. Not that at all. So yeah, it's all good. I'm doing final testing on the sentiment EA. I'm just about to load up a revised version of the EA. I've put it onto a live account to test it because I want to make sure it works properly on a live account on VPS before I kind of fine tune it. But that thing's doing incredibly well. But yeah, that's the thing I never thought to do when I was using retail sentiment in the past. I never thought of position trading it. Every time I've traded retail sentiment in the past, I've always used a stop. And obviously, now that I don't use stops in the vast majority of my trading, coming back and revisiting retail sentiment with a position trading strategy, it's absolutely brilliant because you know that these guys are all going to get liquidated at some point, and it's just a case of waiting. So it's actually, I think, better than using the RSI because you can scale in at any time, knowing full well that there's a high probability of a move in line with COT and against retail. So just trading these, and this is what the EA will do, just trading the retail sentiment ones, it's in and out really fast. You know, so it's bagged $3,500 or whatever, just over $3,000 in the last week. It's sitting in $1,000 a drawdown. But it's in and out so fast because the moves are so fast with the sentiment. So when you're trading against the sentiment, like with the Euro Yen, for example, you know, it moves so fast. Bang, 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 dead. They're shorting it. So the retail have been shorting it all week. Yeah, liquidated. Shorting, finally get some movement, liquidated. Shorting, finally get some movement, liquidated. Shorting. You know, you're in and out in 3-4 days. So there's none of this hanging around for 4 5 days a week, 2 weeks in position trades. But the one thing I would say is I'm only taking trades at yesterday's highs and lows. So I'm in there. Or rather low, I'll be in there. So on this particular case, I would have only been in once there, and I would have been in there, sorry. So the two trades that the sentiment EA would have taken would have been that trade and that trade, those lows and those lows. It would have gone long this morning as well. No, it wouldn't, because yesterday's lows there, it hasn't touched yesterday's lows yet, so we haven't had an entry this morning. But yes, it's good. It's on the other VPS at the moment. I'm just moving it over to one of my other VPSs. I've got many. Well, I've got 3. I haven't got many. Yeah, so this is it. So it's running. It's banked. It's done a little drawdown control this morning, by the looks of things. Yeah, it's done some DD control on US dollar CAD and Swiss yen. But yeah, banked 2,800, sitting in 1,300 drawdown at the minute. Just about to bank New Zealand dollar Swiss, wherever that is. So that'll be banked soon. But yeah, look. So 78% of the market is long New Zealand dollar Swiss. %78 long. So it's been coming down. Three days. Because they're all hitting the long button. As long as they hit the long button, they'll keep liquidating them. So I'd expect to get down to yesterday's low today. And that's where I'll exit the position that I was taken from there. Yeah, it's good. Early days though. This is only just in live testing, so. You have pint donations on your website. Cool. Oh no, well, that's on YouTube. That's not my website. That's part of YouTube. That donation thing. I just put it up there for a laugh. You don't have to buy a pint. Yeah. Nasdaq is really trying hard to go long, but not a lot is happening. So we are actually making a little bit of progress now. So the Dow is not. Look at this divergence on the Dow. So the Dow is heading down for ADR. So we have got market structure now. Obviously, it's all highs and lows. So we're going higher highs, higher lows constantly. But look at the wicks to the upside on this. This thing is struggling like hell to make any headway today. I'd be surprised if we actually get up to that propulsion gap, judging by the way the Dow's coming down. So, Papa, what is the account size of sentiment trading testing? I don't know. I think it's 100K. I think. I don't know. I don't know what it was, that one. Yeah, 100K. Yeah. It doesn't really matter because obviously you just use a percentage, but I've just stuck it on a demo account to test functionality basically. So it's just testing to make sure it's entering at the right levels. The sentiment levels are all correct on the first entries, all that sort of stuff. So it's just basically making sure it's working. So I think this is using $500 risk per entry or something. Yeah, $500 risk per entry. And it scales out automatically with 30% with one ADR move against. So it's doing drawdown control on its own. Pulling back on the NASDAQ, I didn't think this was going to make it today. Dow is heavy as you like. So the wicks to the upside here, really, really strong. AWR on US dollar CAD, weekly range has just been hit. Let me just turn my volume down a bit. We'll have a look at all the ADRs and everything at the moment. There's only one, US dollar CAD. US dollar CAD has also just hit the weekly range to the downside, to the upside, sorry. So there's your low, which was a new spike. And there's your high, which is 188. 186 is the average weekly range. We're coming straight up into resistance here as well. So this area here, anywhere up there really. Just change the color of that. That's awful. Let's go with nice grey, shall we? So yeah, there's your potential resistance. So this area here has been tested 4 times, 3/4 times. We're just coming back up into it again. So likely we'll get a pullback from here. How far the pullback will be, don't know. But if you want to take this short, it's an ADR hit. It's a weekly range hit. We're at resistance. Drop down to M5. Wait for the reversal alert. And then potentially pull back into this area. For a quick scalp short off of ADR. Pound New Zealand, Pound US we looked at this morning. Those two have also hit their weeklies. But I think Pound US will still be going. So yeah, Pound US we looked at yesterday. That had already hit yesterday. 267, that done 278 yesterday. That's still going. Just coming down into support here as well, though. So likely going to find some kind of bounce down here at some point. And Pound New Zealand on the weekly ranges as well. That's come down. That's bounced already this morning. So still looking slightly bullish. If you look at the hourly, we're kind of slightly bullish now, Pound New Zealand. Still massively bearish overall, but I mean, look at the wicks on this thing. It's hideous, Pound New Zealand. But it is still bearish. So sentiment is bearish, retail is bearish. So it is a sell at the moment, this one. So I'll be looking to keep getting in short on it. Still long at the moment. Don't hold up much hope for this one though, to be honest, today. Too bad, was going to throw you a few quid. Retail sentiment really blows my mind. This retail traders are just gambling. Well, I feel special now, not that stupid. Yeah, if you want to do it, that donate, I haven't looked at the donation thing. Oh, crikey, that's big. This is all part of Streamlabs. I've never used it, basically, but you can just do tipping, basically. I don't even know how it pays. I had to put my PayPal account in, basically. So that's all it does, is it just, you can tip. And then it triggers something on the screen, apparently. But no one's ever used it. One sec. Whoop. Was that more ADRs? Yeah, US dollar CAD. So why am I? Whoa, my alerts are all off the screen. US dollar CAD 125 ADR. So that's still pushing hard. I'm quite surprised this is holding up. This NASDAQ is holding up really well. Considering the strength in the US dollar, I would be expecting this thing to tank, and it's not. It's holding up very well. If we get some weakness start to show on this US dollar, this has got a good chance of a pop. Because it's pushing and it should be dropping. As you know, the Dow is and the S&P is. So something's holding this NASDAQ up at the moment. There's probably some stock purchase going on in tech somewhere, which is holding this up. But the S&P is certainly not holding up well, and neither is the Dow. So the S&P is not holding up too bad, but tricky, innit, this morning, this afternoon. I'm going to whiz through all the pairs in a minute. Just have a whiz through and have a look at support and resistance areas, see if there's anything setting up. JC, US dollar CAD is about to get juicy for a sell. Yeah, I like it. I did like it. It's actually just gone straight through that zone though. So what I would need to see on this is a decent move back down for a short. So if this comes off of 125 ADR and pulls back, I think we've got a good chance of a short, but it would be a scalp. So M5 is a bit far away now to get in on the reverse alert. You kind of need to take price action on this, but look at the size of that candle, that last M5 candle. It's a tricky entry for market structure, so you'd have to go on price action. But I'd want the price action to break that low, really, to get interested in a short. Ideally to give us a structure break, but that's a long way away. So the ideal here would be to have a down candle, push up, and then a reversal alert will be there. That gives us a real tight market structure break, M pattern, for a short. And you could easily get half an ADR out of that, I reckon, today stroke tomorrow. Signs of weakness. NASDAQ's managing to push. Let's just see if the Dow's managing to make headway. So is the Dow. So the US dollar's starting to weaken. So we'll see. This is probably a good spot for the CAD, US dollar CAD for a short now. It's an ADR hit, 125 ADR. We've hit the weekly. Aussie dollar, US dollar's just hit weekly as well. We are on Thursday, but Aussie US has just done its weekly range. Again, from the spike of the news, 189. So that's pulling back off of the weekly at the moment. That's a good short, that US dollar CAD. But wait for some price action. It's not giving any signs of weakness just yet. Dixie just took the highs and filled the gap on the 4 hour. Franco, they rip you off 40%. Who does? You talking about that tipping thing? I don't know how it works. Oh, you do monthlies as well. There you go, everyone. Everybody pay me £3 a month. That'd be nice. I literally don't know how it works. I only stuck it on there because when I switched over to Streamlabs, it said, "Do you want to activate tipping?" I was like, "Yep, whatever." I just turned everything on. No idea how it works. I'll turn it on and see what happens. Come on, NASDAQ. I'm going to close. I'm probably going to close it all out, actually, when we get there, if we get there. We're really struggling today. Still got lots of strength in the US dollar. So I'm going to quickly whiz through everything and just basically look for any opportunities of support and resistance for entries. RSI extensions at the moment. Oops, massive. We've got Swiss yen on the 4 hour. Oh, wrong one. So that's coming down now. That's really nicely extended. So Swiss yen, you've just had the 5-minute reversal alert on that this morning in London. It's coming down quite hard now. Look at that spread. 15-minute was there as well, but look at it's just a choppy mess at the moment, Swiss yen. But it is starting to come down. So looking at that on the 4 hour, nicely extended and embedded on the RSI. Every single wick is being brought back up again. So what I would probably do with this one is wait for that 4 hour. So maybe wait for the hourly reversal alert. That's a bit far away. 15-minute you've already had. Ooh, it's a tricky one to get into that. Basically, you're in an accumulation at the minute. So that yesterday's high hasn't been taken out. So the bulls have not managed to get through to yesterday's high. Every time the bears make a move, the bulls are pushing them back. So the 4 hour, you're seeing obviously how much bullish price action there is. However, there's not enough bullish price action to continue the move. So it, to me, looks pretty exhausted. Look at these moves. No profit take. No profit take. No profit take. It's going to profit take at some point. There's a lot of longs in here who are trying to get longer and they're not getting anywhere, are they? So I would say if this closes bearish, we're probably going to start a multiple bar drop. So PayPal don't charge 40%. Not as far as I know. I've no idea how it works. Someone needs to donate and then I'll find out, won't I? JC went long on the DAX. Shouldn't really be trading the DAX in the New York session, but can do. I'm going to get more movement out of the US indices, but DAX is a nice ADR hit. But that will be the same as the S&P. Yeah, DAX, very, very tired. Nicely extended. Just had the reverse alert, so the structure's shifted. It's a bit difficult to see in there, but there's your W in there. Looks good. Euro yen, 4 hour, pretty much the same as the Swiss yen. So again, we're just sitting flat in an accumulation at the moment. As soon as that accumulation breaks to the downside, potentially we could open the floodgates on this, climbing up the stairs, falling down the elevator shaft, which is what they do with the yen a lot. So it's a tricky one. You've had the reverse alert on M5, literally just had it because we just put a new high in. We took yesterday's high, look. Just took yesterday's high out. And you got the reversal alert there now. So it's a bit of a messy one though. So, you know, you've got 50-50 shot with these yens. They are very extended though. Euro pound is extended on the hourly. So you're right in the middle of the range at the minute. This is a long at the moment. So that's the direction you should have been going. I think that was a sentiment trade. Yeah, 68% of the market short. I think it was longer than that. I think there was over 70% of the market was short on that yesterday. So obviously, pop, it's been going up. So yeah, the entry was yesterday. You've missed all that. We are extended to the upside again, though, only just though. So it's pulling back at the moment. I would be looking for any kind of retest in this area to take a long. Pound US dollar. So that is down at this support. So the question is, are we going to get a bit of a relax on the US dollar? We just made a new high on the Nasdaq, new session high. So this lowly candle on M5 and M15 here. So there's an M5 one in here somewhere. Which is that wick. That accumulation there. So if they're going to hold this, and it's a right struggle today to get any progress, isn't it, as we're seeing? If the buyers can do this, and the sellers, I think any minute now, are just going to either give up or they're going to slam it. So, but if we are going to, that is where I'd really look to get out of everything, 126.24, or at least tighten up to break even on it. This is struggling so hard. Every push, look, is just being rejected. Every single candle, bar that one there. Every single candle has got a massive long wick on it. Yeah, sellers are fully in control at the moment. It's either a bear candle or it's got a massive long wick. So there's a massive amount of selling pressure on the indices at the moment. However, this is somehow holding its ground. I don't quite know how. But any minute now, one of these guys is going to give up the ghost and they're going to get a whacking great candle propulsion move going, one way or the other. It just feels short to me. It just feels heavy, doesn't it? You know, when we hear people saying market feels heavy, that's what we're talking about. That's why it feels heavy. There's so much selling pressure. Be interesting to see what we've got on tick strike, actually. Be able to hear what's going on. Yeah, it's all sellers, look, all sellers. 1.2 percentage points lower. As a result of tightening, inflation is expected to be 1.2% lower and 1.8 lower in 2024. Right, so 7.2, 7.3 roughly is the forecast this year for inflation. That's not very good, is it? Would expect it to come down faster than that. You need to keep raking your heights, aren't you? Raking your heights, hiking your rates, aren't you? That's to be the case. So yes, just all selling at the minute. This is what tick strike's good for. Yeah, when you see this sort of thing going on, right, we're pushing up, but you can't hear any positive ticks in the market. Yeah, so there's no large orders going in. Every negative large order, you'll hear it. And obviously you'll see that drop as the negative large orders come in, but you can't hear any positive. So it tells you it's seller biased, which means at some point they're likely to overpower the buyers, because the buyers are just going to go, we ain't getting any further, boys. So, you know, if you've been buying this thing since here, you've been sitting here for 20 minutes now, buying the crap out of this thing, and you haven't made any headway. Yeah, if there's some buyers. If this pumps, you're just going to dump your orders and puke there, and it's going to collapse. There are some buyers in. Maybe, maybe not. Guess shoot down balloons is good for the US dollar. Yeah, keep them coming, China. Yeah, pound US dollar will be coming down on the US dollar strength. Good for driving your dog nuts too. My dog doesn't mind it. Never paid any attention. The kids do. The kids come in and go, "What's that noise?" It's very complicated, children, but basically it's a cricket. I've got it sitting in my computer and I feed it nuts. US dollar yen. I was going through the ADRs, wasn't I? The RSIs. US dollar yen. So we're up at a high. Again, yen, all about intervention. More buying. Keep coming. I like the sound of buyers. Intervention. Lots of it. So just need to be wary with every yen pair. If the market gets a little bit too keen, they will intervene. So you just got to be careful with US dollar yen. I'm much more interested in shorts, not with the US dollar. I'd much rather be shorting something like the pound yen or the Aussie yen, specifically the pound yen, which is in a really good spot right now as well. Look. All these yens are in great spots at the moment for shorts. Yeah, that's the propulsion gap. Nice. Oh, loads of buying coming in. Yeah, but listen to it. Yeah, all the buyers coming in. Are we making any headway? No. So they're buying it, but they're not able to make any progress, which tells me that it's seller heavy, because with positive crickets, we should be getting positive movement. We're not. What we're getting is that buying. Run out of money to buy with? Oh, well, you have to become a seller. And if you listen when we get negative ticks come, I'm still buying again at the moment, but if you get negative ticks landing and you get a candle like that, that shows you that every single seller has got way more than the buyers have got. The buyers are trying their hardest to break these highs. There's some sellers just puked there. That's good. But if you get sell ticks coming through and you actually get a big down candle painted, that tells you that there's a hell of a lot more of them on board. So tick strike's great for futures. I use it in futures trading whenever I trade futures, but we are actually making progress, which is great. Let me just turn the crickets down because Brian's dog will be going nuts. If aliens land on the White House lawn, sell. Yeah. Definitely. If aliens land anywhere, I think money is going to be the last of your worries. If Independence Day is anything to go by. But yeah, pound yen, US dollar yen. US dollar yen, I'd be cautious. But yeah, we are at a good potential resistance here. So this whole area here was support, slammed through it, it's turned into resistance again and again. Yeah. So, but it's going to take the Japanese to intervene to make that happen. At the moment, we've got a very strong US dollar. So what I would be looking for here is if the US dollar breaks that level, I'd be looking for a retest long back up into that resistance support area there. But we need to see this break first. And it could quite easily break through that and reject. It's rejecting at the moment, yesterday's high. God, this is a struggle, isn't it? Right. Other ADRs, RSIs. So we looked at the 4 hours. Euro pound, we looked at the hourly. That was a sentiment play as well. Pound US dollar, again, that's coming down. That is a short. Want to be shorting it. So I don't want to really be longing it out of there. And US dollar CAD, same thing. So there you go. So there's your rejection. So M5, you're not going to get the reverse alert, but it's certainly rejecting at that level. So if you want to get in short there, you've got to wait for some price action. 5 minute is a little bit too fast, I would say. 15 minute is probably better. So if this paints as it is there, all you've got is indecision. Yes, it is a lower high and a lower low. However, it is an indecision candle. So the next candle could easily be a bullish candle all the way up to there, couldn't it? So you want to wait for a decent bearish engulfing or some kind of shooting star on M15 or some kind of decent rejection. That on its own is just one candle. Personally, I want to see 2 or 3 candles giving me an indication something's changing direction, which is why the reversal alert exists. Yeah, it's a multi-candle pattern. One candle does not mean anything. One candle just means we ran out of buyers up there. It doesn't mean there's no buyers left in the market. It just means we've run out of them. And it also means that everybody in the world that is watching this level has a limit order set at this level, has triggered their limit order. That also doesn't mean there are more sellers in the market than there are buyers. It means there's a lot of limit orders triggered there. Here come the sellers. But doesn't mean necessarily that level's going to hold. That could still push through there. So sellers are all coming through now. So we'll see how much the sellers can make progress on this candle with 35 seconds left. Seems pretty even actually at the moment, doesn't it? Lots of sellers. Should change it to barking dog. I can't change it to barking dog. You can change it to, you can change it, not on this version, because you've only got this little one, but on the main Tick Strike software that I've got, you can change it to different things. But it has to be a quick thing. It can't be a barking dog because it would just go woof. Because there's so many large orders coming in, it barks every time there's a large order, and there'll be too many large orders for the bark. So that wouldn't work. So that little selling frenzy we had coming in there was probably buyers selling, taking profit on those orders. So again, we've got a structure break there, higher high, higher low, higher high, sorry, higher low, looking for a higher high. That takes us up into the propulsion gap, which is where we may well start to see some sellers coming through. So I'll be listening to the crickets up here and see if there's any large orders being triggered. US dollar CAD looks overbought. You can't really use the terminology overbought on a Forex pair because it's actually a currency exchange rate and it hasn't got a tangible price. Overbought is for stocks and oversold, but it's extended, yeah, very. It's probably going to profit take at some point, but there is also a chance of an accumulation break there because this is all fundamental news. Yeah, don't forget the reason this is extended to 125 ADR is not because of normal market movement. It's because of fundamental news being positive. So people are buying the US dollar because everything that we've had news-wise from the US dollar this week has been bullish. Yeah, nothing but green figures all the way. So you want to be buying the US dollar. The Fed have come out and said, yep, no problem. We can do another 0.5% now because unemployment hasn't dropped. Excellent. Buy more of it. Make us more and more and more attractive. The higher the interest rate goes, the more people will buy the US dollar because you're going to earn more money from it. Which is why interest rates are raised to make your currency attractive, to encourage people to buy your currency, invest, brings up your GDP, tends to have a negative impact on employment. So, okay, got some sellers coming in prematurely here. Short-lived. So we're holding that low. Made a new high. So we'll need some positive crickets now. Get us up into that area. And we'll see where we can go. But that area there, this whole thing is obviously potentially can become a V-shaped recovery. I would be surprised if it does, but there is potential for this just to pull all the way today. But who knows? The other, we've covered all those, haven't we? So, yeah, so that's everything covered basically on the RSIs and ADRs. All the sentiment plays today have pretty much worked out because the market's been completely the wrong side on the euro and the US dollar. Has anybody got any other pairs they want to have a look at specifically? All the ADRs this week have all worked out as well. Everything's worked out this week, apart from the indices. Got triggered on EU at 106,580. Yeah. So that whole area there basically is strong support. So we've taken out the yesterday's low. We've taken out the weekly low. So potentially a good spot. Reversal alert just triggered on M5. M15, you're just going to get it trigger in a bit. Here come the crickets. More buyers. Which is actually negative for Euro US dollar. That should come down on the crickets. Buying crickets is negative. No, sorry, it's the other way around, isn't it? I'm the other way around. With those fast moves, I'd imagine a bit of consolidation. Yeah, quite possibly, yeah. That's what I mean. Be very careful with these things like the US dollar CAD and that today with these ADRs. You know, ADR, I get this a lot from people in Telegram. It's like, I took an ADR reversal. It's gone up today. What shall I do? Why didn't it come down? Well, because it didn't need to come down. ADR is just showing you the measurement of movement today. It's not a case of we've hit ADR, it's coming down. We've hit ADR, which means we've gone beyond our normal range. Nothing to stop it accumulating and pushing. So, and that is quite often what happens when you've got a fundamental shift. So when we get strong fundamentals for the US dollar being released, it's going to push beyond its average daily range because there's going to be more buyers than normal. Also, it's probably going to flag. And then the buyers are going to add to their positions because they're going to want to break this level and test the market above. So then we look to buy the pullback when we break that high. Chad, thanks for subscribing. So yeah, there's nothing to stop this flagging and accumulating or accumulating here and then driving up. We will probably come and test this propulsion gap at some point, but obviously look at that move there. So this was the unemployment figures last week. Yeah. So look, we came back up and tested it. Was that the unemployment figures last week? Yeah. No. Was it? Oh, I can't remember. I think that might have been Canadian news. But yeah, it came up and retested it. So if you extrapolate this into the future, you know, what we could do very easily here is now accumulate, push, 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 and then come back down, retest, and then go. Yeah, your support resistance is a zone. So this whole area here is kind of a support resistance area. So when we break it, you would expect to bounce and go. But quite often what the market will do is it will pull back deep on that move, like a 61.8 retracement, and then go. And it will pull back to where the move started. The buyers will add into their move. So you never know whether you're going to get a break, bounce, and go, or you're going to get a break, retracement, and go, or whether you're going to get a false breakout and drop. There's no way of knowing any of those outcomes. You have to plan for one or the other. You get in and you go, right, US dollar CAD, hitting resistance, I'm going short. If it gets above there, I'm going to flip long. So I'm going short. It's either going to come down and hit my TP, or it's going to go up and stop me out in which case then I'm going to wait for it to pull back and then I'm going to take a long. If that doesn't work, I'm going to stop out and I'm going to come back down and take a long there. Yeah. So, you know, you don't know what's going to happen. No one can tell you what's going to happen, but those are the three scenarios that are going to go and play out. If we look at this next week, one of those three scenarios will have happened. Fact, guarantee it. There's only three things that can happen. This thing either goes up, down, or goes sideways. So the three scenarios you have from here are, we go down, we accumulate and go up, and then once we've gone up, we either bounce or we retrace and bounce. Or we don't quite get through and we fail, in which case then we probably go back down here. Yeah. No one knows which is going to happen, which is why I position trade, because it doesn't matter if I'm right. If I go short here and I'm wrong and it goes up, no problem. I'll get in short there, because what's going to happen next? It's going to pull back to here, right? So if I get in here and I get in here and it pulls back to here, I'm out. Happy. One. You just got to plan what's going to happen next. And then obviously act accordingly. You know, get into the trade. And that's why I keep saying it's not getting how you get into the trade that matters. It's what you do after you get into the trade. It's how you manage that trade, how you add to the trade. That was sellers coming on board then and not winning. Okay, so we're tapping up into the propulsion gap on the 5 minute. So I am trailing these stops. What I'm going to do, tell you what I'm going to do. I'm going to change the trailer. 269. I'm just going to change this one to 270. I'm going to manually manage it. So I'm just going to pull that up a little bit. So basically, if we invalidate the lows, yeah, obviously we've got a bear move starting. So I'm just going to trail under the candle lows, just because we're in a propulsion gap here. So when this move started, if they're pulling back into this and we are going to find some sellers, this is likely where it's going to be. Mester's just talking again. I missed it. There's no need to cut rates this year, and the main focus is now on raising rates. Bullish US dollar again. So this is potentially bearish index. Except everything seems to have gone quiet. Oh, connection problem. Okay. So yeah, potentially that could be a drop starting there. He's just rallied the market again. So again, US dollar push. So I'm just catching up on the chat. Are you streaming every Forex day? Yes. Apart from tomorrow, because I've got to go to the doctor's. Every morning. It's on the website. Go to the website. Live room. It's all on there. Basically, morning session and afternoon session. Crickets are back. Hooray. Yeah, some people don't like them, especially if you're a dog. Any specific exit rules? Get out when you got profit? No. Bravesh. Is that Bavesh? However, I don't know how to say your name, but go and watch the bootcamp on the website. It's all free. There's a 5-day bootcamp on there, which will give you how I trade, how I get in, how I get out, how I exit. This is obviously what I'm doing here is scalping. So this is different. This is not covered in the bootcamp. This is just an opening range breakout strategy that I trade. But I get in, I position trade. So basically I don't use stops. I get in and I scale in and out of positions as the market moves up and down using the bank cycles. So profit takes off of extended moves, that sort of thing. So it's all explained. There's no profit target. when I'm in profit, I take money. When I'm in drawdown, I add into the position to average into the position. And then I get out when I've got profit on the position. I'm just going to set this to stop as well. I'm just going to trail both of these manually. We're getting very extended now. Nothing but buyers in the market though at the moment, so quite happy with that. So this is the first area I would expect to find potential sellers. It doesn't seem to be any though. And obviously bear in mind, this is a news move. So basically what we've just done is a V-shaped recovery on the news. So there is an argument for that drop as well for the US dollar CAD. So M5, you're going to get a reversal alert there. So you'd be looking at a very wide M pattern reversal because it's going to want to pull back from there at some point. But it's certainly coming down. US dollar yen, US dollar Swiss, pound US dollar will be pushing off of that resistance, support rather. Just about to get a reversal alert on that. So there's that support area. Bouncing out of, we were pushing back up into there at some point. Very difficult to trade this pound US alert. It's just a massive expanding wedge potentially at the moment. There are help wanted signs everywhere. Just a note. I said before, a lot of people have taken early retirement. Yeah. There's a problem in the UK as well with employment. We've got a load of people that don't want to work, but that's not the problem. The problem is, since we moved everybody home, we didn't realize we didn't need them. And there's a lot of companies that have moved over to home working and realized, actually, we're overstaffed. But there is also a problem that people have gone off, started their own business and become entrepreneurs, and now they don't want jobs. So we've got a massive hole in our labour in the UK, but it's more of the NHS and the sort of trained, skilled staff that we haven't got because we obviously Brexited. Now we haven't got anybody to work for us. So that's another part of our massive mess we've got in the UK, which we're struggling to get ourselves out of. But the world has completely changed since COVID, which is what makes this very difficult from a fundamental perspective to analyze at the moment, the market, because the markets are different, very different to what they were 2 or 3 years ago. You know, these ADRs, you know, I was sitting here trading 350, 400 regularly on the pound New Zealand. We're trading 167. It's so tight. The market movement has just changed dramatically. In a sell for the US dollar CAD. Yep. Looks good at the minute. It's a good area, that. I like that area a lot. Massively tested. Whoops. That's the wrong thing to drag. Whoa, can't even grab it now, whatever it was. Anyway, that's what I wanted. So that whole area basically was resistance, support, became resistance. Price discovery failed, became support. Resistance, 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 resistance. So one or two things. Resistance or price discovery, bounce. So when we moved here, we had a weak US dollar fundamentally and everything was bad. Since we've moved down here, oil prices have stabilized, poor for the CAD, and we've had fundamentals shift positive on the US. So I would say the market structure that we're seeing at the moment is going to probably remain fairly range bound, possibly ever so slightly bullish US CAD. But either way, you've probably got a good short there. Loads of balls coming back in again. It's going to be tricky when we get to this level. So we got this area here to think about next. So there's probability of that play out as well, but tricky. I'm quite surprised we're making this much headway. It's been like pulling teeth trying to get up here. So it's doing very well. Dow. Oops. Dow's pushed up as well. So I just got a reverse alert on the Dow. Again, that one's probably got a good test. This level we're at the Dow now is where we bottomed out before the New York Open. So potentially that could act as a resistance. If not, we're coming back up into that propulsion gap. So clear skies ahead if we can get above that level. But this is exhausted. This is going to need a bit of a pullback and a rest or an accumulation up here. It's not going to be able to carry this move on. We've got some sellers starting to come in now. Here we go. Here the sellers come. Probably going to stop out on this now, which is a fairly decent trade. Brian, 1.5R on EU trade. I'm out. Good job. Real skills jobs are desperate for people here as well. Yeah. This is why we had, we're all happy when we're in Europe and the UK. People could come over here, no problem, and work. We needed workers because we've got this real problem in the UK with we pay too much social out. People that have got 8 kids, live in a council house, we give them $4,000, $3,000 a month. What's the point in going to get a job? They can't go out and get a $50,000 job. It's not practical. It's actually better for them to have another child because they'll earn more money. So we've got this thing where it pays you to be work shy at a certain level. The more kids you can get, the bigger the house you get, the more money you get paid. So we had a lot of foreigners doing the jobs that our people should have been doing, in my opinion. Now we haven't got those people anymore. Those people still don't want to do those jobs. So we've just basically got a black hole where we had a load of people doing jobs. We've got something like 150,000 vacancies in the NHS at the moment. We've got way more than that unemployed. It's just nothing you can do about it. But we've created that problem, so we've got to fix it. Well, we haven't. The government have. I don't care. Sellers are getting run over. More buyers. Still not 100% on this here, so we'll see what happens. But ride it as long as it will let me ride it. Let's have a quick flick through and see if there's anything else approaching decent levels. Aussie dollar CAD, pretty decent support area there. Potentially for a push back up. It's already gone though, so you've kind of missed it. Aussie New Zealand stuck. So Aussie New Zealand I like as a pullback still from somewhere around here for next leg down. They're really buying this up, aren't they? Okay. So we've just tapped into that that last pause candle before we sold off. So we might hit a brick wall here. See. It's a pretty decent level on the Aussie US as well. Look, it's tapped through it, but that area has been very supportive. So it was resistance, turned support. First slam through it. Yeah, so this is a key area. We're either going to rally or we've broken through and we're going to push back down into this propulsion. So looks good for a short. So the way I'd play that, wait for a bearish candle to break out of that area as a short potentially, or wait for it to push down into that propulsion and bounce and then get in short on a retest of it. It's a good level. It's extended on the RSI. So it's kind of, I mean, it's already gone now, but it's kind of a buy. It was a buy here. God, they're buying the crap out of this today, aren't they? Look, straight through that propulsion gap. We did find some sellers there, but they got run right over. So that area there, next stop. Let's just quickly look at how the Dow's doing. So Dow's got loads of room. Got 115 points odd on the Dow, so there's plenty of room to the upside on that. Still. Wow, look at that euro odd. Huge rejection. Yeah, we've got a strong Aussie dollar and we've got a weak euro at the same time, which is why this has obviously come down hard. Here comes some sellers. So this is a resistance basically triggering. See if there's enough. Every flurry we're getting, we're just not making headway, are we? Good. I like it. Keep doing it. So Euro Swiss has just hit a decent area as well. So those lows, resistance, resistance, resistance. That's a head and shoulders pattern playing out there. Everyone takes the break. Head and shoulders. I don't know why, but everybody's taught to trade head and shoulders wrong. This is why it doesn't work. You're taught with a head and shoulders pattern, yeah, to take a break of the neckline as your entry. That's your entry, right shoulder. Right now is your entry on that. Trade it back down to the neckline because most of the time when it hits the neckline, it bounces. They don't work. So your trade is actually right shoulder to neckline and then get out. And actually probably long it from the neckline. What is the neckline? Support. We're looking for a support break, basically, on a bullish pattern. Yeah, market structure on a head and shoulders is bullish. Look, double bottom bounce in a bull move. I don't know why people trade them, but they don't work very well. That sold off, stopped out. Oh, yeah, stopped out of one. Not quite stopped out the second. That's a pretty good run. Going to bank 1,400 off of that. That's pretty good. Might bank more if the second one holds. Damn, need to find an English girl, Franco. Yeah. She'll want to go and live in the States, though, or anywhere else apart from the UK. I could collect and trade indexes. Yeah, you've got to have lots of kids first, though. And the other thing as well that is annoying about the UK, and this is a really bad stereotype, but it is actually true. Everybody on that you see, not everybody, this generalization, but a lot of people go around with crutches and limps and things like that because they're on benefits, because they've got a bad leg or something. They get benefits for that, disability benefits. I've got 6 kids, latest iPhone, nice flat screen TV, dodgy leg, my rent paid for me. And it's like you've got to have so much wrong with you, but our government basically go, oh, you all right? Here you go, here's some cash. That's how they fix all the problems. Taking that person, sticking them through college, giving them a degree to become a lawyer would be much more useful. We don't do that, do we? We just give them money. Why have we got a housing shortage? Because the council are buying up every house they can possibly get because they need to put people in them for free. It just, sometimes you just look at the government and think, nope, you have got it wrong. Why? Oh, you're a multi-billionaire? Ah, right. That's why you don't understand what the hell's going on in the UK. Let's put someone like me in charge. That's not a good idea. I would solve all the problems. Sorry, benefits. Not doing them anymore. Get a job. What do you mean you're homeless? Stopped out. So I am flat. That's pretty good. Finally, another good day. So 1,400 off of that one today. Opening range break. Let's move through the rest. See if there's anything else interesting. Already gone. Everything's really gone already. Turn the crickets off now. They're just getting annoying. I don't want to know what's going on with the market now. I'm not interested. I'm out. So this support here didn't hold. Resistance area. So Euro yen, we've now broken out to the highs. So this is a huge propulsion gap here. Oh my God, got to go even further. So we've got this huge propulsion gap here on that news, which we've tested multiple times. This is the first time now we've broken above. So this good indication of the strength of the euro. So potentially I'd be looking for a bounce play on that. So if we can get an RSI extension to the downside, so either bounce there or an RSI extension to the downside, taking out yesterday's low on ADR for a long opportunity on that. Euro New Zealand's just come out to a really nice resistance as well. So these highs, yesterday's high, just been swept. Good looking short opportunity. It's a bit far away, but nice looking short. Euro US dollar, again, down at a good level. Down here. Which we are rejecting, but when you see these bounces here, this is limit order triggers. So this is basically getting automatically bought up. Does not mean it's going to work. We've got a very strong US. Ignore that wick, which was a liquidity run. But the market structure on this is actually bearish at the moment. Yeah. So we've got that move there. We are making kind of lower lows ever so slightly. So, but the problem, as I said earlier, with this morning with Euro US dollar, is we've got a long against a long, which equals each other out, which gives you a range. So this is probably a good spot to be buying it up, because as soon as this US dollar strength wanes, it will give the euro a chance to pop, because the euro is also strong. So playing this back up into that area there somewhere. It's not quite extended on the RSI, which is what I would like to see, but dropping down into M5, you just had the reversal alert and the retest. So there's your W. Play it back up into there or up into there. Sideways mess. Nice bounce on pound CAD. I'd be loath to buy the pound up, but nice bounce. Looking for a short. If we get an RSI extension to the upside, I'll be shorting that. Again, pound Swiss. But again, I'd be much more inclined to be shorting the pound. There's a lot of orphaned propulsion moves on this to come and retest. Obviously, there's this one here as well. So potential move up into there. I'll be looking to short that if we can get up there next week. Pound yen we looked at already. Short the pound. So pound US, again, depending on what you want to do with the US, but obviously this has had a very nice week. The US, first proper good strength we've had on the US dollar. That's a very, very shallow pullback. So we have tapped into a support, which we're bouncing at the moment, but I would expect that support to break. So the trade was up here this week, short. So I would be inclined to say we're probably coming down to this level at some point next week. How far we get back, though, difficult to tell. That's really the max I would look at. So it's a 50% retracement on that move before we drop. Got that big gap on there to aim for as well. New Zealand CAD. New Zealand's been really weak this week. New Zealand yen, that was the original support play. So it's that level there. We didn't quite get back up to it. So we tested it twice. That's the trade I took. And then we collapsed. It was New Zealand yen, wasn't it? Yeah. We didn't quite get back up into that area. So we are contracting now. So you've just had a reversal alert short on the hourly. So it is squeezing. I would say if we can get back up into there, I'd love to short it out of there, but I'm not sure that you'll get back up there. So those are the trades today, this week. But if you want a breakout trade, coming back down probably to one of these levels. New Zealand US, got that support. So again, that's where I'll probably look for a bounce if we can get down there. More US dollar strength. It really depends whether or not the US dollar's got more legs in it, which we're not going to find out, I don't think, until Monday now. So, oh, actually tomorrow. Yeah, sorry, I'm thinking it's Friday. Breaks the neckline, then raises the hand. Yeah, exactly, Brian. That's head and shoulders. Head and shoulders patterns are just, I've said this before in here, haven't I? You know, I can see a head and shoulders pattern on here now that's failed, right? People spot head and shoulders and they go, oh, look, there's a head and shoulders pattern. And it's like a beautiful head and shoulders like that. This isn't one, I'm just drawing it on the chart. And you go, look, that's where you entered. Yeah. Try and find those. Go back in your charts and try and find those, right? Then when you've done that and you've found the 3 in the last year that happened, go back and look for accumulations, because there's a beautiful head and shoulders on this chart now, which is exactly what I'm talking about. Failed head and shoulders. You'll find these all over the place, everywhere. Failed head and shoulders patterns. That's a bit of an odd one, but they're everywhere. Yeah. They don't work. It's one of those patterns you get taught, and it's like, the reason I think people teach head and shoulders is because it's really simple to spot them. In hindsight, they're hindsight traders. They're hindsight patterns. And it's really easy to spot them. But when you actually start trading them, I used to trade a lot of Elliott wave, head and shoulders, wedges, all sorts of stuff. You soon find that actually 80% of them fail. When they work, they're absolutely brilliant. But what they are is the start of a trend usually. So we know that 80% of the time the market ranges and you need to be mean reversion trading. So obviously they're only going to work 20% of the time, maybe 30, because they're a trend breakout pattern. And trend breakout patterns are rare. So it's not until you go through and understand everything about how the market works, you suddenly go, well, yeah, of course they're going to fail. They're doomed to failure because of the pattern. What they're starting is a trend, and trends don't start very often. What we have more of is balance, price discovery, failure, balance, price discovery, failure, balance, price discovery, balance, price discovery somewhere, don't know. But that's what we go through most of the time. 80% of the time, we are range bound, waiting for the next price discovery phase, which people tend to call a trend. Yeah, most of the time, the market is doing this, which is why support and resistance, mean reversion, is much more effective. RSI. Yeah, I mean, look at this. This isn't trending, is it? This isn't doing anything. This is a mess, but it's a beautiful mess, US dollar CAD, because regardless, every single RSI extension you took for the last month and a half, you made money out of. Every single one of them. Couldn't fail. Could not fail to make money. Pop, pop, drop. Accumulation probably made it there. If not, you would have got in on that one and made that. Made that. Made that. Made that. Made that. That one there. Entry, entry, exit. Entry, exit. Top. Extended, drop. Beautiful. But mean reversion, not trend. It's probably head and shoulders in here, isn't there? Probably an inverted head and shoulders. Just trying to find one. They're really messy. There's not really a nice, easy one in there, to be honest. There's an inverted, but that was a news event. That looks like something else. Anyway, but yeah. US dollar CAD, obviously, we've looked at this one in depth. Good sell. So gold, where we are on gold, this is this area is basically a previous area we got a small rejection at before we slammed through it, tested it, moved away. This is the first retest of this area for a long time. This is going back to 3rd of January now. So this is probably quite a weak area, but it is bouncing here. But do you really want to stand in front of that train, the US dollar at the minute? Probably not. So for gold, I would be looking for areas to sell from higher up, which is actually quite tricky at the moment. I mean, any RSI extensions I would be interested in shorting, but we haven't had one at all. So it's quite difficult to get into gold at the minute. Certainly wouldn't want to be longing it at the moment with the US. DAX, nice V-shaped recovery as well. So we're going into an accumulation now on the Nasdaq. So again, this resistance basically. Still a load of buyers though, look. JC, same in the US. I don't think they want to fix the problem, but something else entirely. Yeah, not that's the homeless, the social housing issues and unemployment issues. I don't think there is a fix for it, to be honest. I don't think any government can come in and fix the problem because they've dug such a massive hole with it. You can't really do anything about it, can you? You can't bail these people out. It's like you've created this issue where there's so many people that are reliant on the state. They know nothing else. Their parents have been reliant on the state, and then they bring up kids who are used to being reliant on the state. So the first thing they do when they get to 18 is they go and get their social security or whatever. They go and get their payout for not having a job. And then they find someone that wants to have babies and they quickly bang out 2 or 3 kids and go, I need a house. And they go, all right, here's a house. And here's another 1,200 quid a month. All right, brilliant, thanks. They're just programmed, I think, to do that, aren't they? Some people. And it's just, I've never understood it. But if I was those people, I'd be like, really? That bloke's earning 100K from trading? Maybe I'll get a computer and sit down and watch a few YouTube videos and make my own way in the world and not have a income. I've got a lot of friends who have jobs and earn X a year. I can't get my head around that. What do you mean you earn X? How can you earn X a year? What do you do when you want to go on holiday? What do you want if you want to go to Disneyland next year? How would you get that 15 grand together? Well, couldn't afford to do it. Why don't you try and earn some money on the side? It's just some people just haven't got the mentality to go off and make themselves. That's the problem. There's nothing wrong with it at all. It's a very easy life. I've got one of my best mates is works in a factory and he loves it. He has no stress. Brilliant. Never going to earn a lot of money, but doesn't want to, doesn't need to. So each to their own, I guess, isn't it? But personally, I like nice things. It's like trying to afford them. You've got to make your own way, I think. And if you don't make your own way, there's obviously ways to make money that you don't have to do anything for a job, which is nice. Luke, hindsight is a great thing, yeah. Hindsight's trading. There's a lot of people that show you how to backtest strategies, but never trade them. Oh man, I just lost it. Brian, what did you lose it on? Sorry. I'm catching up on the comments. Trouble is, I don't read the comments. I just waffle on for 15 minutes, go and look at the comments. It's like, what was I talking about when they said that? Real talk. Yes. So yeah, I'm not going to be here tomorrow because I've got the doctors. So I'll put a note up on the website, but and I will reschedule the streams for Monday. So I won't be here for tomorrow afternoon session, and tomorrow morning session I've got the phone call with the doctor at some point, and he starts at 8 and he phones sometime between 8 and 10, and I've got to drop everything and go and see him. So I've no idea what time that's going to be. So there's no point in really trying to start a live stream. And I don't really want to get into any trades because otherwise I'm just going to not be able to manage them. So I'll leave it tomorrow and then come back on Monday. And hopefully by then my arm will have some medication that actually works. But as it stands, I'm just in constant pain at the moment. So nothing I can do about that. But if you are trading tomorrow, obviously it's a very quiet day tomorrow. So if you're in any positions, a lot of your positions probably have paid out today based on the US moves. But there's very little news tomorrow. So and Monday as well is a bank holiday in the US and Canada. So I will obviously stream on Monday. I will definitely do the London session. I might not do the New York session on Monday because the markets won't be open. So it will be open, obviously, because the Globex session runs all day, but it won't be doing much. So there's not much point in actually trying to trade on Monday. Position trading, though, we'll be looking for setups on that. So that'll be okay. Make sure you get some extra Labrador from the doc. What? Extra Labrador? He's giving me something. Basically, I said to him on the phone when I spoke to him on Wednesday, and he said, or Tuesday or Wednesday? Yeah, Tuesday. And he said to up the dose of the tablets that I'm on, basically by 3. So I've tripled that. And the phone call tomorrow is going to be, how did that work? And I'm going to say, it didn't. Okay. Right. Well, I've got other drugs that can help you, he said. So I'm hoping he's going to put me on morphine because that's really cool. Can I get medical marijuana in the UK? I don't know, actually. I'm not sure. I don't think I want that, to be honest, because you need to be sharp. So this is the problem I'm having this week. I've been in such a daze all week on the medication. It's just been really, really hard. So I've come off of some of the medication. I was on codeine, basically, and codeine makes you drowsy. The drugs that I'm on for the nervous system basically give you blurred eyesight, so I can't read the chart prices properly. So yeah, I'm hoping what he's going to give me is going to be a fairly quick weekend fix, but I don't know. I think I've got to go to the hospital for a scan, basically, but we'll see. But yeah, medical marijuana would be quite nice to take at the weekend. I don't even know if it's legal in the UK. I don't think it is, actually. I'm pretty sure it's not because people get caught bringing it in. My mate used it after he couldn't take the opioids anymore after back surgery. Yeah. Well, that's the opioids I've got. The codeine is an opioid, I think. You're only allowed to take them for 3 days, and I've had my 3 days worth of those, so I had to stop taking them. But they didn't really do a lot, so he needs to give me something more. It's just one of those things you got to wait with these nerve problems. There is nothing they can do really because it's a nerve. You can't. The drugs that I'm on are what they prescribe to people that have schizophrenia, bipolar disorder, depression, that sort of thing. So with those conditions, they want to numb your nerve receptors to bring you down, basically. So that's what these do. It's meant to numb my C6 nerve, which frees up my arm. But he's got me on a dose now, which basically is kind of the max. And if you go more than that, you get into big trouble. You're not getting into trouble, but it becomes to the point where it will start affecting me mentally. So he doesn't want to do that. So I reckon it's going to be morphine, which would be lovely because morphine really does numb all pain. But you can cop in Kansas City legal now. What a mess. What? My one mate used it after he can. Oh yeah, opioids are back surgery. Yeah. Brian's just sent me something in Telegram. Cheech and Chong.
Wowie, man. Yeah, but it's got some Labrador in it. What's
The Labrador.
It's dog shit.
What?
Yeah, my dog ate my stash, man. I had it on the table and the little motherfucker ate it, man.
Yeah?
So I had to follow him around the little baggie for 3 days before I got it back.
Brilliant.
Really blew the dog's mind.
You mean we're smoking dog shit,
I-
man?
I really wanted his steering wheel when I was younger. This is a classic. Classic Cheech. This is what my mate's car used to look like in the 90s when we were driving around going to like raves and stuff. That's what the car used to look like. We made sure the windows were taped shut because then obviously you could just sit in the back. That is brilliant. Love Cheech and Chong. Yeah, I'd love to be sitting in that car now. That would sort me right out. Anyway. Right. Librium. No, I don't know what Librium is. I haven't got that. I can't remember what it's called. It's in the other room, but that is cycling or something. I don't know. But yeah, anyway. But hopefully that'll be fixed. Well, not fixed. I mean, if I get to the point where I've actually got no pain, I'll be fine. That's really all I just need to do, get rid of the pain, because at the moment it's 24/7, either ache, dull ache, or stabbed with a knife type pain, and all through the night as well. That's the problem. It's the not sleeping thing that kills me. So trading's going to be fun next week. Yeah. So I'm not scalping. I blew. Oh, by the way, I forgot to say at the beginning, I blew that second stage evaluation yesterday. Unfortunately, I hit the max loss. Stupidly, I got into trade on the Dow, and I thought I'm going to scale into it, and I scaled into a drop, and it got me. So lost that one, unfortunately, which is annoying because it was meant to be a position trading account, and I position traded 80% of it, but it was the scalping that killed it. So that was a pain. I lost that one, unfortunately, but never mind. So yeah, back to normal position trading next week because I don't have to concentrate on position trading because I can literally check the charts twice a day, and I haven't got to worry about it. And obviously I can let the EA runs it for me anyway, so I don't need to do anything. There'll always be tequila. No, there won't. I can't drink on it, Franco. The drugs I'm on, I'm not allowed to drink on. I've got 2 really nice bottles of Japanese whiskey downstairs, and I can't have it. Well, I can. But what it does, apparently, this drug that I'm on, is it triples the effect of alcohol. So it does with a lot of drugs, when you take them, what the no alcohol rule is because it cancels out the effects of the drugs. With the particular ones that I'm on at the moment for this nervous thing, the nerve numbing drug, it actually makes the alcohol more effective. So I think the reason they don't want you to do it is because if you realize what you can get on alcohol when you take these drugs, you'll probably want to take these drugs for the rest of your life because it means you can drink a third less alcohol. Have the same effect. But I'm not brave enough to try it. But I think a few whiskies would actually really sort it out. But I don't know. We'll see. Anyway, suffered from shoulder impingement all last year. Not fun. Is that what they call it? An impingement? Yeah, basically, the way he explained it to me was the C6 nerve that comes out the top of your spine. Basically, it gets inflamed, and there's a little hole it comes out of, and basically the nerve is bigger than the hole now. So every time I move, the nerve rubs on my spinal column, and that's what causes the pain. So it's just waiting for that nerve to sort its life out. But last case scenario is steroid injections, which I really don't want to do, but I don't know. We'll see. I just want to get back to spinning. I haven't been spinning for a week. And literally, I'm turning into a beach ball. Not good. You could, but your liver and kidneys will take a hit. Yeah. So, yeah, that's the thing that I'm worried about. I don't really want to take alcohol with them. But I don't know. I've had that impingement a couple of times too. Excruciating pain. Yeah. I've not heard it called an impingement, but that kind of sounds like it. One of my friends at spinning as well, she had it in her leg. So you got obviously all the nerves coming out. You got nerves that come down your left arm, your right arm, your left leg, your right leg from the back of your brain. And basically, depending on which one gets trapped, impinged, whatever, it affects that particular limb. So mine is my left arm, and my left hand and my left thumb is particularly completely numb. And hers was her right leg. So you can imagine walking around with a dead leg for literally, she was over a month. She had a numb right leg. Imagine trying to walk around with a numb right leg, like when you sit on your leg. It's like, I'm all right because it's my left hand and I'm right-handed. So, you know, my mouse hand isn't affected. I can do everything. My left hand just sits there and does nothing, which is fine. But if it was your leg, my God. So, yeah, I hope I never get that one. That would be horrible. And in pain as well with it. Why does my RSI look different? Does it have different settings? Different to what? Different to that? No, they're the same. So all the RSIs, you've got different properties in there you can change. So different levels. So if you want different levels, you can add different levels in here. Just add a new level or delete an existing level. So if I didn't want the 50 line, well, I'll take the 40 and 60 off. I don't really use those. So delete those and they'll disappear. Yeah. And you can change the color, the type of line used. You can put text labels in the description. Is that what you mean? It's just customized to, I just like the look of it. That's all. There's nothing special. I just made it clearer. And I'm interested in 70 plus basically for mean reversion. So that's all I really have on there. And the 50 line, I mean, I don't use the 50 line at all. Should really take the 50 line off. I don't use it. Some people use the 50 for buying above and selling below, but that's all I'm interested in. Areas where we're selling it and buying it. As in US dollar CAD at the moment. But yeah, you can adjust it. You can modify it as you like. Coding works, but the dreams are so real. I'm not dreaming at the moment. That's the trouble. I was on the paracetamol and codeine mix. And unfortunately, it wasn't a particularly strong dose of codeine. So, but I'm not dreaming really because I'm in so much pain at night. I don't actually get a lot of sleep. Last 2 nights, actually, since he's upped my dose on these other things, I have actually had sleep through till about 4 o'clock in the morning. So I've had a good 6-8 hours, which is nice. Why have you applied on median price? So the reason I use median price instead of close is because median is the closest you'll get to the TDI version of the RSI indicator. So the difference between them is not massive. So we're on 75 there and we've got a max of 80. So that's an 80, that's a 75. If you change it to close, it's still an 80 and it's just under a 75. So there's not a lot of difference in the two. But what the median gives you is a smoothed line. So it's a little bit smoother. There's not a lot in it. It doesn't make much difference at all. When something's extended, something's extended. So with the RSI dashboard, you know, I've put on the RSI, wrong one. On the RSI dash, you can change it to whatever you want. Mine are all set to median, but it's very little in it. Doesn't really matter. But if you look at the TDI, I don't think I've got a TDI on here. No, I haven't got a TDI. I should find a TDI again. I don't know where my TDI's gone. It's probably gone forever. I don't use it anyway. But the TDI, the reason I use the RSI, if you've done my bootcamp, you'll know that everything I do is bits and pieces taken from other courses other strategies that I've learned over years and years. So the TDI, the Traders Dynamic Index, was what Steve Malrow used to use for his stop run sort of strategy, if you like. But all the TDI is an RSI with a moving average and some other lines in there which were never used. So when you strip out the parts that Steve Malrow actually used to create what he calls a shark fin, yeah, that's what Steve Malrow used to trade on. So his saying was, don't trade until they've hit the stops and you get a shark fin. All that he was referring to was an RSI extension drop. So what I did was I stripped everything out of the TDI that was not used, put up an RSI next to it on a chart, and I fine-tuned the RSI using the settings so that it matched the TDI RSI line, which was a median. That's the only reason I use it. But to be honest, if someone put a gun to my head and said, you've got to use the close, it would make very, very little difference at all in my trading. I'm still going to get an extension. You know, all this is doing, this is a condition indicator. The purpose of the RSI is to tell me when something has pushed really hard, because I know that when something is pushed really hard, the market will profit take that move. Yeah. The market buys and it keeps buying until it gets to a point where it's happy, and then it sells that off to make money. We're jumping on the sell-off because we can't time the buys, but we do know that the sell-offs have to happen, because if the sell-offs don't happen, the market can't make money. And if the market can't make money, the banking sector won't exist. If the banking sector doesn't exist, neither does the market. So as long as there are banks, they will need to push price and take profit. And as long as that happens, the RSI will tell me when they've pushed price. That's the reason I use it. It's just a condition indicator. It alerts me. And this is what the RSI dash is here for. It's to alert me to the bulls or the bears have been pushing this instrument. Get ready to jump on their profit take. That's literally what the RSI is there to tell me. And the market reversal alert indicator, yeah, at that point, from there, that's when the RSI got extended on the hourly. I would then be watching this, waiting for a market reversal alert to take a short entry. There would have been an alert there, which I would have got in short on. May have got in there. I probably would have got in there as well, actually. Depends how far away it was. 46, yeah, so I would have taken a second entry somewhere up here, probably there. Depends where you get in as to whether or not you would have got in on that one or whatever. And then get out when you're in profit. Again, somebody asked earlier, what's my exit strategy? That's my exit strategy. When my P&L is green, I exit. Whenever that is. So in this case, with this particular trade, if I'd have got in there and there, I would have been asleep from there to there. I would have woken up there and gone, fantastic. And I'd have taken the profit. Right now, we've got an M pattern reversal. Again, Steve Malrow, M pattern. When I say things like M pattern, W pattern, those are terminologies I learned from Steve Malrow. And all he's referring to is a market structure break, which tends to form an M pattern, either that way or that way. So it's either a stop hunt M or it's a sell heavy M in this case, if you like, because it doesn't make a second high peak. And that's what the market reversal alerts indicator is based on. So I built this to alert me to M patterns. Again, part of Steve Malrow. But I didn't get on with Steve Malrow's course because I just couldn't trade it. I tried to. And like JC's just sent shark fin back to the Mayo. So he uses moving averages. Worst thing in the world, moving averages. They're awful. They don't work because they lag. You know, if you put a 200 moving average on your chart, what you're saying is, show me where price was 200 candles ago. What the hell use is that to me? I don't know. How's it going to help? 50 moving average. Show me where price was 50 candles ago. Why? Useless. It's got absolutely nothing to do with where this thing's going next. Where this thing was 50 candles ago has got no bearing whatsoever on that. So, you know, he used to say things like when the 50 crosses the 100 or whatever, you're in a bull market. Well, yeah, but it started here, the move. When the cross happened, you'd missed half the move. And now what you're doing is you're waiting for it to pull back to that moving average. Well, if it's pulling back to that moving average, we're in a bear market. So there's chances are it's going to do that. So, moving averages are just terrible as far as I'm concerned. They're the most lagging indicator in the world. The reason people love them is because they're very easy to trade, but they don't work very well. Very few people make money trading moving averages. I use the moving averages on the higher time frames because these are the ones that show me what the long-term market movement is from institutional basis, quarterly and monthly. I'm interested in where the big players are going. This is what these moving averages tell me. So on the 4-hour chart, when I'm looking at something, I can instantly see there's no directional bias at all at the moment because we're just flip-flopping around. Whereas if I look at something like the euro US dollar, I can see instantly we've been in a bull market and the institutions have been buying for X. But that doesn't tell me that they're going to carry on. What it tells me is they have been buying. That does not help me right now. Is the euro US dollar going up or down? I've no idea. No one has. So these things are utterly useless. Yeah. So, they're good for pullbacks sometimes. So, I use them with the S&P when we're in a bull market. I pull back to the 24 and I enter and I'll take those trades. So if something is trending and I am expecting the fundamentals to tell me that it's going to continue to trend. So when I come over onto here and I look at my directional bias scorecard when it loads, and it says to me, I want to be buying the euro pound, for example. When I go and look at the euro pound, yeah, every time it pulls back into this area, I'll look to buy it. Because I'm expecting this to continue because the fundamentals and the COT positioning is telling me that that move should continue. That's why I use these moving averages, because they are showing long-term fundamental and futures market positioning. But when you go down to the hourly chart and you start using a 20 and 50, all they're doing is telling you what's happened. I don't know, how many candles are in a day? 24. They're telling you where you were 2 days ago. It was pointless. I've missed it. If you put let's put a 20 on there. Trend. Yeah. So, look at this thing now, right? We've just crossed above the 20. Yeah. It's a buy. I know it's a buy. You don't need this to tell you whether to buy or sell it. I can see prices coming down. Yeah. High, low, lower, high, lower, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, equal high, equal low. Right. We're bottoming out. We should start looking maybe for buys now. The moving average isn't telling me to do this. Market structure is telling me to do this. All that moving average is doing is confirming what I can see on my chart. That is prices coming down. When we get up to here, everybody goes, oh, let's buy the bounce. Why are you going to buy the bounce? They've just done a liquidity run of the highs, potentially in a pullback on a short. Why are you going to buy that? Because it's bounced off the moving average. But this is telling you what happened 2 days ago. Useless. But they're easy to trade, and sometimes they work. Yeah. Well, yeah, but look how many times, if you'd have taken every bounce on the 20 on the way down, you'd have made a load of money. Yeah, I would have done exactly the same thing if all I'd have done is gone with market structure. I'd have been in it up here and I'd have still been in it on the way down because it gave me no reason to get out. So that, yeah, they are useful in some respects, I guess, but all they do is they tell you what's happened in the past. It doesn't, that's not respected the 50. That's not respected the 50. That has, that's not respected the 50. That's not respected the 50. That's not respected the 50. It never touched it. That one has. Everyone goes, oh, look, it touched it to the pip. Yeah, it did once in, what are we looking at, 10 days? Useless. That's got a 10% strike rate. Chuck it. that's my view on moving averages. Do you not use RSI divergence? I don't use it. No, you can use it. There's RSI divergence here. Look. So you can use it. It's a confirmation. I call it a confluence. So if you've got an RSI extension and you've got divergence, what you will probably find most of the time is you've got an M pattern reversal alert. Yeah. So there's no divergence there, but I mean, see if we can find one. There you go. So you got divergence. Usually when you get divergence, you'll get a reversal alert because divergence indicates a market structure shift. And that's what the reversal alerts tell you anyway. Yeah. So you got divergence and a market reversal alert. Whenever you see divergence, you will see a market reversal alert. So you don't really need it because this does the same thing. Yeah, divergence. Oops. This is on the hourly chart, but so yeah, I mean that. That's not really divergent, is it? But that's that's a bigger push, but yeah, I mean you can use it absolutely. There's nothing wrong with using divergence, but use it as a confirmation. I traded divergence for a long time with the MACD. It's just got the same strike rate as everything else. You know, it's all the same stuff. However you trade it, it doesn't matter. If you wait for divergence, right, you missed that beautiful short. Why? Because you didn't get divergence. So you missed that trade. If you wait for divergence, you'll miss loads of opportunities. But when you've got something really strong and really extended and you have divergence, that is an extra confluence to help you go, yeah, that's another tick for my trade idea. So it is useful in that respect, definitely. Brian, I recently tried 66.67 and 33.33 as support on the RSI. Again, these are numbers, and whether you use the 70, 75, 66, 80, 85, 90, whatever you use there, it's just a measurement of extension. And what you tend to find is most of the time, when you're over 70, you're also getting over 75, over 80 a lot of the time. When you're, and you know, Steve Marrow as well, he uses the 68. Why? What's, you know, the difference between a 66, a 68 and a 70? Yeah, you're going to get different signals on them. But at the end of the day, it's an extended condition, which has got a profit take coming from it. I prefer it to be as extended as possible. If I had my way, I would not trade anything under 80. It's just, I don't get, this is an M15 chart. You will get a lot more, but look at the H1 chart. Missed all that, got that one. You got a signal there, which you would have got, but, and I got that one. Yeah. So I missed these because I was trading the 80. But if I was trading the 70, I'd have made more trades. So the difference between this and this, from a strike rate perspective, there's not a lot in it, because if you get in at 70 and it pushes further, you're going to be in at 80. So all you're doing is you're getting in one extra trade and then you're taking a second, rather than missing all of the 70s, which will have worked beautifully. So I've found that using 66, 70, 75 or 80, there's very little in it, especially with position trading. What we're looking for is extended conditions. Whether it's a 70 or an 80 is irrelevant. It's extended. It's been a big push. That's what this is just telling us. There's been a big push. Get ready for a profit take. When's it coming? No idea. It could do that, that, and that. I have no idea, but get ready. And I don't think using a specific number really helps. I've settled on 70. If you want to use 75 or 66, that's fine. They're all going to give you a signal. It's just a case of, I want something to tell me to get ready to get into a trade. So I need a market condition to tell me when there's a signal ready to take. But yeah, he, like I said, 66 and 32, 68 and 32, it doesn't matter. You mean you use RSI to validate the right order block? Don't trade order blocks. Go and do the course, Jar Jar. You'll see exactly how I use everything. What do I think would be the TP on that sell? Which sell? This US dollar CAD? Don't know. If you're in it, you're in profit. Take whatever you want. There's two levels to look at. There and there. And then the start of the move, which is the propulsion gap here. So if you're talking about this trade, depending where you got in, you could take profit there, you could take profit there, or you could take profit there. I don't use TPs. I get in and I get out when I'm happy with what I've got. But I look at levels in that way. Uh-oh, the fireman. My good friend lost thousands dealing with the fireman. Quit trading. I got all his stuff free. The fireman? Who's the fireman? Is that Steve Malrow? Is he a fireman? I keep ketchup, mustard, and mayo in the fridge, yeah. Yeah. He says, like, it's all this terminology that people come up with in trading about different things. It's funny. It's just how you see things, isn't it? The moving averages, color coding them is just a way to see, see what each moving average is. But why not just call them the 20, 50, 100? Or whatever. I can't even remember. I think that's what they were, wasn't it? I can't remember. Mauro has some good nuggets to use, but the moving averages always bugged me too. Yeah. No, he's good. That's what I mean. I that's what I say in my bootcamp. Day one of the bootcamp, I explain how I put my strategy and my trading systems together, and it's all other people's stuff. I don't claim any of this is new. None of this is new. This is all stuff. There's nothing new. No one can ever come up with anything new in this industry. Everything has been done. It's all just learning from different people and picking what makes logical sense to you. And depending on your brain type and the time frames you want to trade, you need to pick different things of different strategies. Who's Lee? Me. Probably right, going for the Lamborghini and got the Volkswagen. Yeah. 134.047. Is that your target? I can't read. Yeah, there. 134. So that's a good target. Yeah. Asian high. But you got to watch yesterday's high here as well. This could easily do that, because it's a fundamental move based on news, and this is a propulsion move which broke that high. So there is going to be bias sitting in here. I suspect it will probably come back down to here. Yeah. Always use fib as well. I mean, I don't trade fibs at all, but I do like to use fibs to give me an indication of strength of pullback. So I class that as a shallow pullback, medium, and a deep pullback. Deep pullback would be somewhere down to there. But look, that is a deep pullback. That is a medium and a shallow pullback. A shallow pullback is this propulsion gap that we're in now. The deep pullback will be that support. So you always try and look for things that line up with something else, because it's more confirmation. Fibs work some of the time. Support resistance works some of the time. If you've got a fib level that coincides with a support resistance, you've got twice as many people watching that level. That makes things happen. This whole market moves on people's sentiment. Institutions are people. They drive the market using their sentiment. They will say, sell it here down to that level because this is the only place we got to last time. So what happens when it gets down to there? It stops because these guys see that level and there's institutions buying at that level because that's where they bought last time. So this is why support resistance works, because it becomes a self-fulfilling prophecy. The reason this stopped here these many times, not coincidence, is because there's people interested in selling it at that level. And every time people sell it at that level, more people get interested in selling it. And therefore it becomes stronger resistance. When that resistance breaks, nobody thinks it's ever going to get back through there. So what does everybody do? They buy that level. And that's why support becomes resistance. Banks and institutions are humans. That's what drives the market. And again, I think it's Steve Maurer goes on about that, the sheep mentality. We are sheep. That's why retail, trading against retail works, because the sheep are wrong at 85% of the time. So if the sheep are long, go short. They're wrong. It's just doing the opposite. FVG is propulsion, etc. Many different types of names, nothing new. Yeah, exactly. See, like I've said, this thing is not an FVG. This is called a wide range bar, and this terminology, wide range bar, and the concept of wide range bar trading strategy was invented in the 80s. ICT wasn't trading in the 80s. He just got this concept and called it an FVG. I was taught that this was called a propulsion candle, so I call this a propulsion gap. It's the same thing. It's a wide range bar, but call it what you will based on who taught you what it is. I got taught by one of my mentors about propulsion candles. Other people call them impulse candles. It's the same. It's just a big move. But what it is you need to understand about these candles is they are indicative of large bank selling and buying. So it tells you which direction the large market participants are in and where you are likely to get a reaction, because this is where they started. They will either end there or add from there, usually, depending obviously what's going on with market and price and news and everything else. But there's, everything's got a different name. I'm surprised somebody hasn't renamed the moving average to something else yet. The wiggly worm. There we go. I use the 24 and the 72 wiggly worms, and I also have the 200 wiggly worm on there. He's more of a slug because he's really slow, and he doesn't really help me because he tells me what happened 200 days ago. I've not got any inkling of why the 200 moving average bounce happens, but it does. I know why, but it does. What's a propulsion gap? I would just explain that. That's a propulsion gap. That's a propulsion gap. If you want to learn about propulsion gaps, go to this website. You will not come back for a couple of months, but go there anyway, have a look around. It's called the Strategy Lab. This is the guy that invented wide range bar strategy. He has a very, very old website built in the 80s. 2002 actually is the copyright on it. So still, it's 20 odd years old. So, you get my point. This is the guy that came up with it. No one else. YouTube wasn't around when this thing was up. So if you want to learn about it, it's here. But at the end of the day, it's a propulsion candle. But there are many strategies to trade with wide range bars. But at the end of the day, all you need to know is this is where you are potentially going to come and retest. So these act like magnets for price. So when you get one, typically you will find it will get tested. And it will either act as a resistance or it won't. But it will get tested. That's the point. You don't really need to know anything, but when you see one, highly likely you're going to come back to it. When they form, they act as a magnet. Yeah. Very rare you'll find a wide range bar that is not retested at some point. So when you see them, we're heading that way. don't spend too much time on here because you will never come out. I spent months in here. I even joined this guy's group. You have to go through an exam. You have to do an exam and send him information to actually get into his private group. And when I got into his private group, I found pretty much the same information as on his website. So skip that lot. Listen to me. I've done it all. I've just told you everything you need to know. Basically, that's his magnets. Just use them. They're great. Where do I get a mentor? You're listening to one. I don't know. Mentor is just a term for somebody you learn from. So if you spend long enough around one person, you will basically pick up everything they know. That's what a mentor is. Somebody that's been around a long time in whatever you're doing. There's lots of people on YouTube that have been around for about a year that offer mentoring classes. You take your pick. Who you jump into bed with is obviously up to you. But all I would say is when you're looking for a mentor, look for somebody that you can, that what they're doing makes sense. If what they're doing doesn't make sense, it's not for you. Everybody's got a slightly different way, or everyone's got a very different way of looking at the market and trading the market. So if what I do and what I say makes sense, and what I look for makes sense to you, yeah, listen to me. If you think, what an idiot, he doesn't use a stop loss, that's crazy talk, don't listen to me. Yeah, that's all I can say. I've had lots of mentors and I learned lots from all of them, but none of them made me profitable. I had to make my own thing to make myself profitable, because you can't do what other people do. You can get bits and pieces. I've got a friend who, not a friend, it's an old person I used to trade with, but he uses wide range bar strategy. I met him in the WRB group. He does nothing but this, but he only trades wide range bars created by news. So a propulsion gap caused, or wide range bar caused by a news event, he will wait for that to get hit, and he will only take that. That's the only trades he takes. He takes 3 or 4 trades a week, if that. And he's very successful. But he's got a really, really slow, patient mentality. So if you try to learn from him and do his strategy, and you've got an itchy trigger finger and you need to be in the market, that's not your type of strategy. If you've got an itchy trigger finger and need to be in the market, position trading is great, because position trading, you can hit the button whenever you like, and there's a good chance you actually make a profit. So, you know, just you need to pick something that makes sense. That's the most important thing. You know, I went through lots of courses. So I started in stock trading. And everything I learned in stock trading was all about price action. And I went full circle through stock trading, Forex, back to stock trading, back to Forex, into futures, back to Forex. But that one thing I learned at the beginning, which was price action, support and resistance, is what I do now in a nutshell. I trade market structure bounces from support and resistance using extremes. And pretty much what I learned on day one in my very first stock trading course that I paid $2,500 for. Well, I don't know what it was. It was a lot. Every course I've done since has taught me pretty much the same thing. But what we're doing is we're all looking for the Holy Grail strategy, and you will find the Holy Grail strategy, and basically it's the one that goes, aha, and you won't know until you've done it. I never knew those purple boxes until now. So they are for propulsion gap, yeah. So that's the WRB indicator, WRB hidden gap. It's on the website. On here, in the zip file, MT4, gap indicator. You think gap indicator, call it what you like. You know, it basically highlights propulsion candles on your chart. Impulse candles, or whatever you want to call them. Big moves. It's a big move radar. There you go. I'm going to make my own indicator. I'm going to call it the big move radar. And that's basically what it does. Do you have an explanation of the ADR? Yeah, explanation of the ADR is on the indicator page for the ADR reversal indicator. How to profit from ADR. And that teaches you all about ADR, how ADR works. So watch that video. That will explain ADR in detail. I'll put a link in the chat. Aren't we really trading against computers? High frequency institutional trading? Not at this level, we're not, no. High frequency HFTs aren't directional. So it's quite a common misconception. And, and this other thing that, ICT talks about, this IPDA, or whatever it's called. I can't remember what it's called, IPDA or something, some algorithm that controls the market or something. I've got mates in banking, they've never heard of this thing, but I guess what he's referring to is the HFTs, which is the high frequency trading algorithms. The HFTs are designed to basically with futures trading and with trading in general, you have liquidity providers. Liquidity providers are the big banks and institutions, and they provide liquidity to the market. So when I need to get a fill on a trade, most of the time it will be filled by an HFT. The HFTs, if there's no prices available, it goes out to a dark pool, which is another area you can get filled in. But most of your trades that you take will be taken by, a bit loud, HFTs on the other side of you, right? What the HFTs, and the reason the HFTs make money is, look at the 1 minute chart. The HFTs are entering the market with a spread, right? And when you are a liquidity provider, you get first dibs on that order. So I place a sell order now. The HFT will jump ahead of everybody else in the queue, and they will be said, do you want that order? If that HFT has a sell order or a buy order placed here, he will take that order, price will tick down, and he will fill the order with his buy and make a profit. And this is what HFTs are doing. Every time this ticks up and down, you're seeing algorithmic HFT trading, high frequency trading. That is probably $50,000 worth of volume or something. I don't know. It's like loads of money basically going through it. So the HFTs do not have any influence over direction at all. The HFTs fulfill orders and scalp micro movements out of the market, which is why a lot of the times you will see these propulsion gaps get filled. If an HFT fires and skips a level, it will need to come back to balance the market, balance its book at that level. It will drive the market back. So these algorithms have got thousands and thousands and thousands of contracts at their disposal so that they can basically come out at the end of the day with a balanced book. So during the Asian session, you tend to find it does that. Reason being is the algorithms are building a book, and they will have a positive or negative bias on that book. The HFT will be sitting there with a bias in one direction. The banks then take the market in that direction to fulfill their profit targets. And that's all HFTs do. So, people say, oh, you're never going to beat the algorithms. The algorithms aren't doing this, on the hourly chart. They are in there. They move price up and down, but algorithms need order. You can't have an algorithm that can make money out of chaos. Algorithms make money out of market structure, out of market movement that is predictable, because to be able to make money in a predictable manner, you need a predictable market. So you're not fighting the algorithms. You just need to be on board with the algorithms and know what the algorithms are doing. Most of the time, the algorithms are trying to find liquidity to fill orders so that we don't have to send our customers to the dark pools and not get the order, i.e. not make the money out of the HFT transaction. So what they do is they hunt liquidity. And where is liquidity? Opposite end of where retail are. So if everybody is sitting short on the Swiss yen, where is the liquidity? At the highs. Why is that going up? Because everybody's hit the short button. The market knows, and the HFTs know, the liquidity is sitting at these levels. As soon as they push a down button, everybody shorts it, they put their stops there. They know that when they need liquidity, it sits there. So when you're talking about fighting the algorithms, this is why everybody goes wrong in retail. Because they don't understand what the algorithms are doing. We're on the right side of the algorithms. Yeah, we're trading exhaustion. We're trading after those moves, and we know that these are exhaustion moves, and they're not going to go like that. But everybody that enters short here is expecting this to come down and make them £1 million. It's not. It's going to pull back and get their liquidity at some point, which is why we scalp ADR. When we get an ADR hit, we don't go for a 3 ADR move in the opposite direction. We go for a quarter to a half an ADR move back, because it's a profit take move. They are enticing people long so that the liquidity gets placed and the HFTs can come and take it when they need it, because they've got to fulfill orders. Yeah, a bank is sitting there with Microsoft saying, execute $100 million worth of transactions for me today in the US dollar, please. Okay, no problem. Right, we've got to buy $100 million US dollar. There's only 50 million US dollar out there in sell orders. We can't execute this order for him. All right, so where is there going to be liquidity? Up here and up here. Okay, we'll drive price up there and go and fill that order. Does Microsoft care whether they get filled there or there? No. In the grand scheme of things, Microsoft executing a $100 million transaction couldn't give a monkeys if they got 143,955 or 145,345. That makes no difference to them at all. But the bank get paid a commission for executing the order, so they will go and drive it where they want it to. So we know if these guys are doing everything in that direction, that's where the liquidity is going to be. It's just knowing how it works under the hood. And this is stuff that you learn over courses. I've done courses. Anton Creel has a fantastic course on fundamentals. You know, I get my fundamental strategies and understanding of how the banks operate from him. I get my understanding of market structure from somewhere else. I get my understanding of support resistance bounces from other people. But I got a mentor that taught me about price action at support and resistance. He taught me candlestick patterns at levels. And now I understand why. So he taught me that when you get down to here, it'll bounce. He never explained why it will bounce. I now know why it bounces, because I know there's liquidity pools and limit orders sitting there from institutional players. So I was trading quite happily support resistance bounces with no understanding of why it was working. Now I know why it works. And it's just, you know, this is what you pick up over the years. So you suddenly get all these bits and pieces and you pile them together, and you come out at the end of it with a strategy that makes total logical sense to you, and you can trade it and understand it and have confidence in it. But you're not going to know that until you've learnt from X, Y, and Z. And at the end of the day, everybody you learn from will tell you exactly the same thing. Pay attention to support and resistance, or depending on who you're talking to, supply and demand, or liquidity runs, or stop hunts, or whatever you want. It's all the same stuff. Support and resistance levels, limit order, triggers. If you're trading futures, order books, it's all the same stuff. It's just levels. So all you've got to do is understand the levels and understand what needs to happen at the levels and happen at exhaustion and why that happens. This happens because the guys that bought here have to sell their orders. This happens because the guys that bought there have to sell their orders. All these guys that have bought here, when you look on a 4-hour chart, are absolutely extended long in the teeth, and they're desperate to get out of these trades. To get out of those trades, they need to become sellers. RSI is telling us they are too loaded on their buys, so they will need to sell soon. Yeah, I'm not going short because of the RSI is extended. I'm going short because I know the bankers are sitting there going, oh, guys, as soon as we hit the sell button, let's go and buy a Ferrari. That's why I'm selling, because I know what they need to do to make money. But you don't know all of this. There's no course that teaches you all of this in one lump sum. Actually, there is. It's called the Position Trading Bootcamp, and it's on my website. But, you know, you get what I mean. You know, you pick the bits that click, and if it doesn't click, move on. Take what take what you understand to be true and throw the rest away. That sounds like me. I cannot control my inner demon. Inner demon. Everybody's got an inner demon. Most of your inner demons will be telling you to get out of a trade as soon as it goes into profit. It's not a problem as long as you're not using a stop loss. If you're using a stop loss, the inner demon's going to make you a loss. There you have Mr. Lee as the mentor. That's why I get up at 2 a.m. Yoga pants, gap instructor. Oh, gap indicator. Gap instructor. I can't read properly. My eyesight's too blind at the moment. Can you share where you learn support and resistance from? Well, I've probably just explained that, haven't I? You can't. I mean, there's nothing really to learn, is there? That is an area where price moved from. It's a support. It came up and it went to that area again. It's a double support. The next time it came there, we got a bear candle and it slammed through it. So the next time I expect it gets to this level, it'll become a resistance. It's a 50-50 shot. Always. Every time you get to these levels, there's a 50-50 chance that it will either go. So this bottom we bounced from. The next time it gets there, it's going to either do that or it's going to do that. Or it could do that. But the only thing about, there's no right way to draw this either. Yeah. My original mentor that taught me price action support and resistance, he taught me to do this. I'll show you what he taught me to do. I'm going to open a blank chart. Go to the weekly time frame. Draw a line at every wick, high and low you see, where price turned. Yeah. I mean, you could go there and you could go there. Or there, or there, or there. If you're undecided, get rid of it. Yeah, obvious, super obvious. Super obvious, super obvious. I actually drew it on that one, but super obvious. Yeah, there and there and there, right? Then go down to your daily. Zoom out and fine tune those lines. That one's fine. That one's fine. That one there, I would just move it down ever so slightly because we've got almost a touch, 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 touch. So that's a little bit of a better level, ever so slightly, a little bit of reaction there. That one there, fine. That one there and that one there, fine. That one there, fine. Yeah, move down to H4, repeat. Zoom in. So that one there to there. So this is how I was originally taught to do it. And then you just go back. Yeah, and you go, oh, hang on a minute. That's an obvious one as well. Missed that on the daily. Bang. Draw another one. Found another level. That's an H4 one. And if you want to, you can color them. So my H4 is going to be fire brick and a little bit thicker. Yeah. Go back and do the same thing. Oh, there's another one there. That's an H4 one I missed. Didn't see that on the daily. And that's not quite right because it's that level as well. So I'll tell you what I'm going to do. I'm going to use that high and that high. And I will call that a support zone or resistance zone. So you can come out of your chart and extend that level. And what you'll find is that that level from there gets respected. Yeah, there's no right or wrong way to draw it because there is no exact hit. It does not hit the line perfectly ever. It's an area that price has previously reacted from. So what I prefer to do, and is the better way to do, and most people teach now, is to use a zone. So use an area. So that high there and that high there is a support resistance area, right? but I would probably go down to there. That wick encompassing that high, and we got stuck a bit there, didn't we? So roughly somewhere around there, if we ever get to it, I'm pretty sure somewhere in that zone you're going to find we'll have some kind of reaction. So when we get there, if I drop down to M15 and wait for a market reversal alert, there's a good chance that's going to work. Stop above that level if you want to use stops. That area there, I kind of like that as well here. Yeah, because we had multiple reactions at this level. So again, use a zone. So you build up your support and resistance using multiple hits. So this is an area that price has previously reacted at. Yeah, in there, popped out again, didn't it? So this is roughly a decent area to use. Coming back down to here, that's a lovely one. But you've got this bit here it came down to as well, look. So what you can also do is grab that line, move it down to that wick and go, right, that's another area that I like the look of, because we hit it there, we came up into it here, rejected, pushed above it, came down, hit it there, rejected, hit it there, bounced out of it there, we bounced out of it there, we accumulated through there, a couple of bounces there, hit, miss, but it's a pretty good area. So just building up zones on the chart, which is why I say when I look at when we're trading the opening range breakout strategy, I go out on the NASDAQ or the Dow or the DAX or whatever I'm trading, go, where are we going? Because if we are trading up here and we break down, my first thing is, right, where are we headed? Probably there. We could possibly head into that area. So you could draw that one as well. But you see what I mean? There's no right or wrong when you're drawing support and resistance. It's completely down to you as a trader to decide what you think is a good level. Some people, I'll draw that on there and go, I like that high and that high and that high as a zone. And other people will go, well, that's a load of rubbish because that's bang in the middle of these two zones. So I wouldn't use that. I'd use that one. Fine, use that one. So if that does that, you won't take a long. I will. And if that does that, you'll go, okay, we've broken through that zone, so I'll wait for a pullback long, because you won't see this. And this is the important factor. You draw it on your charts. And what one of my mentors drummed into me was, and I get this question a lot, why do your charts look different to mine? Well, because my broker's slightly different. Well, I'm not getting exactly the same price as you are. Doesn't matter. You trade your charts. You mark up your charts how you see them, and you trade them as you see them. Every zone here has got exactly the same probability of working. Whether I draw one here and you don't, does not change the odds of price reacting at that level. So you just use that level if you want to, fine. If you don't want to, don't. I don't like that level because there's too much chop in here. There's too many places. The obvious spots are the better ones. So if you want to use that low there and that low there, that low in the middle, that becomes a zone. Next time price hits this area and you see some bullish price action, H1 reversal alert, M15 reversal alert or something, take a long, put a stop outside that zone, because if that zone gets invalidated, this is probably not a good support. And you want to do what? Wait for it to break, retest and drop. That's how I was taught to draw support and resistance. You go and look at another 50 YouTube videos, other people will draw it differently. If I give everybody in this room a blank chart now of Euro US dollar and say go and draw a support and resistance on the 4-hour time frame for the last 6 months, I'll get completely different charts back from everybody. Everybody will have certain levels, obviously, but how you determine support and resistance in here is completely discretionary. That's a great one. You know, the rule I was taught by my mentor was, if it hasn't hit twice, it's not support and resistance. What I soon discovered was, if it hits that level, that is the second hit. I'm taking the second hit. This is a weak support. when it's been hit, it becomes a stronger support. If it hits it again, it becomes a super strong support. But then another mentor taught me, if you knock on the door 3 times, the 4th time, you'll probably smash through it. So someone will say that's really strong because it's hit 3 times. I would argue that's weak because it's hit 3 times. It's going to smash through. If you don't have somebody saying that it's going to be a sell and somebody saying it's going to be a buy, there's no market to trade in, is there? Because every buyer has to have a seller. So if you tell me this is a strong support and I tell you it's a weak support, what happens here is you take a buy and I take the opposite side of your trade. One of us is going to win, one of us is going to lose. That's the market. The odds are that either you win or I win. Do we care who wins? No. You just accept the fact that it's going to go where it's going to go when it gets to the level you think it's going to get to level. If it turns there, brilliant. If it slams through it, fine. I've no idea what is going to happen at any level. That I didn't know when I was taught support and resistance. It's nothing, yeah, so what you're saying is support and resistance is not science or maths. It's an art. It's subjective. It's completely discretionary, yeah. But what you will find is there will be levels everybody will look at, right? So everybody on the 4-hour chart is looking at that level. Everybody on the 4-hour chart is now looking at that level. If we push up and come and retest that level, people will buy it because there will be limit orders placed at that level right now to go long. Because it's an area of support. If it comes back to there, the last 2-3 times it came back to this level, 4 times if you include that, we bounced. If it comes back there again, I'm buying it. And that's the reason support and resistance works, because I'm doing that. How many other people do you think are doing that? How many institutions do you think are doing that? This is moving from this level because institutional buyers are stepping in. If Barclays are stepping in and HSBC are stepping in, Citibank haven't stepped in yet, what do you think Citibank are going to do next time it comes to this level? They're going to step in. And all of a sudden, you get a load of institutions trading in the same direction, we get a move. That's why it works. It becomes a self-fulfilling prophecy. But how you draw it and which you get into is totally down to you as an individual. However, there are areas which are totally, totally obvious. I mean, anybody in the world told to mark up support and resistance on this chart is going to go and do that as a bare minimum. That is, they will all do that. Every single person will do that. That's the most recent. That's the peak. That's the peak. That's a really good level. I like that level there as well because we went 1, 2, 3, slammed it, hit it twice. So I like those levels, but I'm not sure which of them to use. So I'll call it a zone. If we get back to that area, I'm pretty sure you'll get a trigger. Why? Because the banks can see it. I can see it. Everyone can see it. So it's going to happen. And you just got to pick the ones that you like. Yeah, and it's really that simple. There's lots of other things you can use, like pivot points, ADR. Yeah, but ADR is a calculation based on historical price movement. Pivot points are calculations based on historical price movement. So those levels only become a self-fulfilling prophecy if enough people use them. ADR is a little bit different because ADR is to do with exhaustion. The banks can only execute a certain amount a day, and that is why you only get a certain amount of movement on average a day for each instrument. So it's designed to show you what the instrument you're trading's normal ranges are. Pivot points are a calculation based on mathematical formulas for price movement. So they work because other people use them. If you've got 100 people using pivot points, you're going to get some movement. But pivot points have nothing to do with fundamentals. You know, if we get to this level here and we bounce 1 hour before non-farm payroll and it comes out with the unemployment figures being a 3% drop, do you think this is going to go, okay, no problem? No, it's going to smash through it. So they're only technical levels as long as the fundamentals support that move. So this is why we use fundamentals to give us an overall bias. So the euro US dollar is a mixed bias at the moment, slightly bullish, slightly bearish. So if we hit a level of resistance and I have a slightly bearish sentiment, I'll take it. If I hit a support and I have a slightly bearish sentiment, I won't take it. In exactly the same way as with an RSI, if I'm on the Swiss yen, if I've got a long bias on the RSI, I will take RSI hits to the downside. If I've got a long bias, I will not take RSI hits to the upside because I'm expecting it to go up. I don't want to do that. If I am going to take it, I've got to be very careful because I'm expecting that sort of movement. So I skip those and only take those. Yes, there's less opportunity, but look at the moves. You know, they're easier, they're safer. So you've got to get lots of little bits, put them together to give you an understanding of everything. And this is why there's no magic indicator out there that makes you money. You can't do that because there is no magic indicator that knows what the fundamentals are, can read support and resistance in exactly the same way as you can. You can use an indicator that draws support and resistance, but you know, is it drawing it in the way that you want it to, or are you just going to trade the way that it's telling you to? And who says it's right? It's, you know, a level is only a level to be used with risk management. Anyway, there you go. So there's a lesson in support and resistance. And that's where I learned it from. Papa got to Lee's website. It's all, oh, you go to Lee's website, it's all there, yeah. You need many ingredients to make a stew. That is correct. No support and resistance is not science or maths. It's more of an art. Yeah. Do the automatic support and resistance indicators work? Go and try some. I mean, I've got a supply and demand indicator in here. I've no idea if it's any good or not. But yeah, I mean, make your mind up. It's pretty good, isn't it? I don't know. It's doing a pretty good job, but you know, I don't know. All it's doing is highlighting the lows, and I guess, and this is the thing you'll find with this indicator, what it's probably doing is using some kind of semaphore, MACD, not MACD, fractal. It's using some other indicator to find these peaks. So you might as well use that indicator. It does the same thing. But you know, there's lots of these out there. If you want to use them, use them. What I prefer to do is look at the chart and go, I like that level and that level. So if we get back down to there, because it's also yesterday's low and ADR, I'll take a long. Wait for a reversal alert if the RSI is extended. So I'll highlight that level. Yeah, it's got confluence with yesterday's low and ADR. It's a nice area of support. We pulled back, bounced, pulled back, bounced. So if we do get down to there, we're going to be extended on the RSI. We're at a level of support, which is also yesterday's low, which means they could be taking liquidity. And it's ADR, which means it's exhausted. So drop down to M5 and I'll wait for a reversal alert or retest at that level. And I'll get in. I have no idea if it's right or not. Obviously, no one has. So you just get in and hope. And this is where the position trading element comes in. If I take that trade and it doesn't work out, I will take a trade from that level. So I'll take a trade. I will add a second position there because we will be massively extended by there. And there's a good chance it's going to pull back. That gives me an exit on both of those positions with a profit. So again, I took everything I learned and I got taught to do dollar averaging by a different mentor, or more of a course really. And I combined the dollar averaging with everything I know about supply and demand or support resistance, whatever you want to call it. And that's basically how I came up with my way of trading. Simples. Just took a long time to get there. That's exactly how I draw support and resistance, weekly, daily, 4 hour. Got to go out of power. Good hunting. Yeah, see you later, Nick, Franco. I use Fibonacci as well. It seems to match support and resistance. Yeah, it will do. So Fibonacci will match support and resistance. And the reason it matches support and resistance a lot of the time is because it lines up. People go, you know, if you draw a fib on this now, this move, right, you will find if it pulls back and bounces, everyone goes, hey, look, it's a 38 retracement. No, it wasn't. It was a support bounce. Or it pulls back into here, they'll go, hey, look, it bounced off the 50. No, it didn't. It bounced off resistance. Support. If it pulls back to the 61.8, they'll go, hey, look, it bounced off the 61.8. No, it didn't. It bounced off of previous resistance, turn support. It all will line up because it's all the same stuff. Whether you use the fibs or you use support and resistance, entirely up to you. They both tell you exactly the same thing. If you use the RSI, the stochastic, the MACD, the ADX, they all tell you the same thing. Slightly different ways, but they're all oscillators which tell you there's been a movement in a direction. You know that because you can see it. All I want to know is how far. And should I be going in that direction? It's all the same stuff. You just need to pick the bits that make sense. And that's what I say. If you listen to everything I say in the course and it all makes sense, fantastic. If not, move on. But take something that I've taught because some of it works. I'm short the end pairs right now. Cool. You got a good chance of getting good profit out of those, I think, because I've got a feeling the Bank of Japan is going to intervene soon. Anyway, it is 5:30. I've got to go. So I'll be back on Monday. No more sessions tomorrow, unfortunately, because I've got the doctors. So I'll be back Monday. I'll put a note on the Telegram group to let people know. I'll be back Monday morning, and then I probably won't do an afternoon session on Monday either, because obviously the markets are shut. It's a day off, basically. So, and then we're back to normal on Tuesday. So if you are using the ORB EA, the opening range breakout, make sure you don't run it on Monday, because we're going to have very light liquidity. Kansas City shuffle. Everyone looks to the left. You go right. Exactly. Franco, 2% power. You better go. Go and find your plug. Okay, guys. I'll be back on Monday morning, 7:50. We'll see you then. If you need anything, I'll be in the Telegram group. Other than that, have a good one. Hopefully it's profitable tomorrow, and see you on Monday.